liquidity or investment by global investors into the safe haven currency, and out of the risk currency. Your safe haven currencies are the US dollar, the Japanese yen, the Swiss franc, and of course, gold can act as a safe haven precious metal, but when you're just looking at the currencies, those three are the primary safe haven currencies, and the US dollar and XAU USD has a more prominent inverse correlation now, especially that gold on the Okay, what's going on, everybody? How's it going? Welcome to a Capital Hungry London trading session. Welcome back. Yeah. Thank you. One sec. Yeah, mostly everybody's muted. If you want to unmute yourselves, just let me know. Then I'll enable that. Just give me a second here to set up, and then we'll start our analysis. All right. Okay, so how's it going, everybody? It is Tuesday, February 23rd, coming towards 2:30 a.m. Eastern, pre-London hours. We're going to be doing some intraday analysis on gold, GJ, GBP USD, Euro USD, USD CAD, and US 30, looking for some potential trade ideas. Right? Some of the economic events we're going to be focusing on. The UK jobs data has already passed. We just want to keep in mind that it is a Japan holiday. And of course, we have the Euro CPI at 5 a.m. Eastern. And then we just have some US data later on during New York session, of course, there. Just some stream reminders before we jump into it. For anybody who wants to contact me, anybody who has questions about the Capital Hungry service, Capital Hungry overall, take the time to follow the Capital Hungry News Twitter, the free Telegram analysis channel. My contact Telegram information is all there as well. This live stream is always saved and recorded and has the DVR option enabled. So once we do our analysis and share the trade ideas and we patiently wait to execute, for anybody else that comes in later and is asking questions about what we were doing on gold or GJ, just tell them to rewind this webinar because it's going to be running for like the next 3 to 4 hours now until like 5-6 a.m. Eastern. Okay. And before we jump into it, yes, our goal as traders is to make some money in the markets, but you have to focus on preserving your capital and protecting your capital. So make sure you always stay smart, follow your trading plan, follow your risk management plan, focus on your long-term vision, and keep emotions out. You don't need to be trading every single session like some of these gulaggers or these other guys. You know what I mean? You don't need to be doing all that stuff. You only need to take a few solid trades a week and focus on the quality over the quantity and understand that the market is always here, but your account may not be because you burn through those accounts all the fucking time. All right. Like Mr. UN here, how can I deal with emotions? I've been trading for 2 years, but I'm at break even. I manage risk very well. If you manage risk very well, then you should be in profit. No, the Zoom isn't recording. So make sure you guys take that in. The Japan holiday is February 23rd, the Emperor's birthday. Today is February 23rd, right? So yeah, keep that in mind. Yeah, we can do some swing trade ideas as well if you guys like that type of stuff during these streams. But I initially like to start with just our analysis across some of the main pairs we look at, such as gold, GJ, GBP, USD. If you guys read the description, Yeah, no worries, John. Today's February 23rd, right? Yeah, yeah. It's the Emperor's birthday. I don't know. I don't know who the Emperor is, but it's his birthday. Okay. All right. So let's start off here with gold, shall we? I'm just gonna start. I'm not expecting too many people to join the first stream because I'm just coming back after a week, and I started this late. I apologize for starting this late, but we've had a lot of snow here, and I wasn't home, so I was driving back, and it took a little bit of extra time. All right. So let's start off on gold here. We're gonna just be starting off a bit on the higher time frame. If you guys have been following along with what I have been talking about on gold on the higher time frames, you guys would all understand the historical repetition we have seen, very similar to what we saw during the 2008 market crash. And then once all of that market fear was priced in, we had gold play in this higher time frame range and consolidation zone for an extended period of months, bouncing up and down between these candle body highs and lows essentially, until we had further signs of economic recovery and central banks raising interest rates, where we had a deeper correction and then a continuation back up years later when we had the trade war, we had the Iran tensions popping up, we had the pandemic market popping up, etc., etc. Right? So what I want to identify is that from as per historical repetition, we are in a similar state to what happened after the 2008 financial crash, and all of that information was priced in. You can see gold had a great initial upside move for that year. But once all of that fear and negativity was priced in by investors and you started to enter signs of economic recovery, you got a shift in that sentiment and in that movement. So right now, we've already had massive gold upside over the last couple of years due to trade wars, due to the potential war in Iran, and of course, due to the pandemic markets and that impact it had on the precious metal gold. It heavily increased the demand of gold, but it decreased the supply because you had all of these mines around the world were shut down. Less supply, high demand, higher price of whatever that good or service may be, right? So we've already had that heavy upside to print new all-time highs, similar when these were new all-time highs. And now you can see we're starting to even see similar repeat price action with the mix of bullish and bearish candles in this very large higher time frame range. All right. So before I move on, can you guys hear me in the Zoom chat and in the YouTube? Yeah, okay. Okay, good. All right. So, before I move on, I just want to make sure you guys can understand that concept of actual economic historical repetition and the impact it had on gold as a safe haven precious metal. Okay. So, now, yes, gold had a very strong sell off, but let's zoom in more and look at this. It's very similar to how it was behaving here. This flat candle body zone is a very strong level where, yes, we can wick a bit lower than it here a few times, but look at where the candle body's closed for an extended period of months, almost having this ping pong motion in this higher time frame range, right? So you're seeing something very similar now here. And with that, and as we zoom down the time frames, you're going to notice that even when we had that strong aggressive sell-off, we still failed to break previous intraday lows as well. And I'll show you guys that more on the weekly. So this is what I want to dissect for everybody. Gold, and now we're just zooming down the time frames, dissecting it. We understand why gold went to 2075. We know why it was so bullish. We've already broken that down on the monthly time frame. We understand after all that fear was priced in, nothing just goes up. Everything has its market waves. What goes up eventually has a correction or must come down in some way or fashion. But what this transaction is in the markets is those positional buyers that have been buying gold, once they exit out their positions and liquidate out of the market, sellers jump in as well to relieve them out of the market and also push price down to a better demand area. So we had this corrective structure playing on gold where the highs were getting smaller and smaller and we were printing new lows continuously, right? Until here. You can see that we were trending in this nice descending channel until here where we actually failed to break the previous low and are showing more bullish pressure and sellers exiting position for a potential higher time frame double bottom in this area. Okay, so with the weakness and another good confluence for some potential gold strength is what we've been anticipating here is the weakness in the US dollar as well. Okay, so our safe haven currencies, and we're going to be using this to our advantage. We have to understand our safe haven currencies, like on the higher time frames, the US dollar, the Japanese yen, or when we look at our other indicators to read market fear, such as the volatility index, it's still very flat. They're still very bearish in structure. They're still very bearish in price action. That means investors are taking the money out of the safe haven currencies or shorting it, and they are putting that money. Yeah, Kashif, or you guys, that's also another. That can be also another sign is rising bonds, but that correlation hasn't been as active during the pandemic markets because the low interest rates, the fact that the central banks keep these low interest rates is a positive bullish factor for gold long term, right? But anyways, so what this shows us is that the money that moves the market, whether you want to call it the banks, the whales, the smart money, the one percenters, I don't care what verbiage you want to use, all right? When you see money coming out of your currencies that are treated like safe havens and going into the stock markets, this means that the markets are optimistic, investors are confident. Investors are investing in trading with the central banks and with the greed and optimism train. All right. So that's why ever since the pandemic market got priced in and that initial fear got absorbed by investors, and then central banks started coming in and supporting their respected economies, since then, pairs like GBPJPY, GBPUSD, Euro USD, Euro JPY, AUD USD, AUD JPY, it doesn't matter. Anything with a safe haven currency secondary has been primarily bullish in overall structure since March. Right? Obviously, they're not going to look all exactly the same, but when you're zooming out and looking at the overall structure, since that March pandemic initial crash and fear, we have been bullish since. As the central banks, the corporations, and the governments just milk the markets. Okay? So we want to keep that in mind. But anyways, what I was talking about on gold is that the weakness in the US dollar is a good thing when you're looking for gold buys because you are trading gold against the US dollar. We're not trading gold against the euro here. We're not trading gold against any other currency here. So that is another factor. So some things I want to highlight are the exhaustion at these previous lows, the fact that this is a very strong demand area that we have pushed to after a very strong correction from these 2075 highs, right? And the fact that we do have potential to come back and retest this bearish market structure and potentially even go higher if we have the fundamental catalyst. But what we do want to notice when I come to like the intraday time frames is any of these aggressive dips on gold during this corrective structure, even though gold has been slowly respecting this corrective structure and slowly printing lows, right? Look at how buyers and sellers behave anytime you have these aggressive dips formed. And now we're coming to that exact same price point, right? You have very strong upside moves, even though it can get a bit messy, and you have, even though it can get a bit messy from these dip points, you have very aggressive upside moves because sellers exit positions and buyers jump in accordingly pretty fast. So when we are rejecting this previous low point, when we had this aggressive sell-off and this macro dip that failed to break this low, that's showing me more sellers exhaustion, right? And we are also having lower time frame bullish market structure developing, which and key levels now being used as support. Okay, so pretty much here on gold for me, this was going to be a very strong sell area around 1820, but I do see this potential bullish market structure continuing back up, similar to what we've seen when we saw this dip get bought up. Even though you had some aggressive pullbacks, gold slowly kept chugging its way back up as it was playing this pullback corrective bullish structure. That's why in Capital Hungry to start the week, we were already calling buys from 1781, 1789, 1795, playing this corrective bullish structure, right? And you can see this similar pattern when you look left, and when you see these aggressive dips, you can see how gold starts to behave here. Even if we start to get a bit of a pullback, if it doesn't break this corrective bullish structure, I'm still primarily in a buy bias, looking for pullbacks and then looking to take any buy entries. And you can see the reactions here as well. Whenever you've had a previous aggressive dip, here example as well. Look, you had this bounce from 1853 all the way to 1917, this massive downside move, which looks like gold sellers are jumping back in, but it doesn't break that bullish structure, and you have buyers jump right back in to buys to the right back to new intraday highs, right? So that's what I'm trying to see here on gold, where I've identified some intraday and lower time frame bullish market structure that's been respected since early in the week. We've been watching this, right? You can see since the 1772 low point, the low started to get significantly smaller, and we started to see more impulsive buyers moves creating minor highs. Then you would either get two things. You would either get a pullback and continuation up, or you would get a consolidation phase and continuation up, right? Here, for example, on gold, we had this upside move, consolidation, and then continuation, pullback, continuation, pullback, continuation, right? And you can see our higher time frame historical key levels are being used as support points. So what I'm primarily looking for on gold would be, I would only be looking for sells if we could break below this price sensitivity zone around 1806. If we could come below 1806, I would be looking for some corrective sells down to about 1795, where I would want to look for peak buys at 1795. If we could get gold to consolidate here, show us some sellers exhaustion, break below this medium term zone where you've seen this 1 minute reaction after failing to break these highs, then there's a very favorable pullback option here on gold to set up better buys from 1795, push price down to a better demand area, and then continue our way up. I would only be looking for gold buys otherwise if we could consolidate and then break above 1812 key level. All right, so yes, I am in a bullish bias on gold. I hope you guys understand why, with that historical repetition and the fact that sellers failed to break previous lows and the lower time frame bullish market structure. But we are currently sitting at an intraday high where a lot of us have been riding buys from 1781, 1789, and 1795. So I don't essentially want to buy at the top without the confirms, right? Does gold make sense to everybody, from like the higher time frames down to the lower time frames? So right now here on gold is an area that I essentially do not want to trade from 1806 to 1812, even though it's a nice 60 pip range and we could have a sell off right down to 1806. I essentially do not want to trade this range because the lower time frame here has been quite messy, right? So what I'm waiting for is either these options. So pay attention to this, okay? Either we break below this little order block and fail to break these highs and break below this price sensitivity area, and we take some corrective gold sells down. Now remember, those gold sells would only be to set up potential better buys after, just to take advantage of the pullback as price is getting pushed down to a better demand area and buyers jump in from a better price, which I would estimate would be at a retest of this bullish market structure that has been respected since the start of the week so far right now, right? So if we got a retest to this zone, which lines up with 1795, it's like a crosshair point. You have that bullish market structure meeting that higher time frame key level where we've already seen great reaction here. So I'd have a lot of confirms if we make a lower time frame support here. Anything even like something similar to like what we see in these reactions to the left, and we fail to break. This would be a great buy area right back to the previous highs and potentially higher. Now, when I zoom out, one thing we have to be mindful about is this. Sorry. This bearish market structure coming around 1820 area. You can see as we've printed continuous lows and had consolidation phases and pullbacks, then printed lows, this bearish market structure on the flip side has also been respected, right? The safest for anybody who's thinking about a more of a higher time frame trade, you don't like to scalp, the safest gold buys for you would be above 1820. As soon as gold breaks above 1820 in that bearish market structure and continues to respect this bullish structure and breaks above this order block to the left and that bearish market structure that was respected for like months now, there is a lot of room for gold upside to continue right back up. But until then, even if we were to catch the range from 1812 to 1820 to revisit this bearish structure, that's 80 pips, right? But obviously right now, what I am noticing is after having some strong buyers impulsive moves, we're starting to get some exhaustion here. When you're getting signs of exhaustion, it doesn't mean a sell-off is coming. You could just have gold, instead of having an aggressive pullback, just consolidate and then break out to the upside, right? It doesn't always have to be a pullback. It could be a liquidity zone, a consolidation, or a pullback to push price down to a better demand area. After peaking this new high, this intraday minor high, just to start off the week here, I would appreciate that pullback and then continuation up. So the gold options I'm looking at are either one, exactly. So either one, gold consolidates overnight and messes around in this range and we don't touch it, and then if it breaks above 1812 and these 1 minute highs at 1815, then we start to take some continued buys to the upside, right? Vikram, there's news as well to pump gold today. What news? And why is it going to pump gold? All right. So either we let gold consolidate, generate its order flow and liquidity, and we catch the next impulsive breakout to the upside, or we notice that we have failures to break these in another. This is I'm gonna give some options where you might be low risk and you like to wait for your confirms. All right. If you wanted to be lower risk and wait for your confirms for sells, you would wait for London Open to grab liquidity and fail to break these highs, and then clear out these 1 minute lows and start to take some corrective sells down. That's a lower risk sell entry, less reward. High risk sells would be if you are a higher risk trader, higher risk, higher reward, less confirms involved. Higher risk sells would be if we have London open up first, like London opens up and we push up first and we reject this area. This would be high risk sells. Okay. Powell's not speaking until New York afternoon. It's almost like it's like longer than it's like 12 hours from now. So we could get in some trades from by then. You know what I mean? So, anyways, this would be high risk, high reward styles. Meaning, your only confirm is that that at London Open we are rejecting the exact same price point. They've already talked about. They're not going to talk about bond buying plans or inflation again. Trust me. A lot of that has already been priced in. They're going to keep it pretty much status quo for now. Anyways, that would be high risk sells. Your only real confirm is that London Open pushes up first to grab liquidity to the upside, fails to break those highs, and then you're already essentially in profit before as we even go to revisit these lows at 1806. 1806. If we break 1806, these 1 minute price rejection areas, then you have more reasoning to extend your sells down, but that would be the safer sell entry. Okay? So understand that in 14 minutes we have London Open. We're going to be watching gold accordingly. The safer buys would be if we do that pullback and you don't want to take the buys here, the safer buys would be if we come all the way back up and start coming back above the key levels. 1803, 1812. Right? Do you guys understand? So right now, though, gold has just peaked new intraday highs, and we are just entering a consolidation between these candle body highs and candle body lows here. That would be your first TP, Alvarez. Yes. 1795 would be considered high risk, high reward buys. Yes. Because your confirms when you're coming down here is that we're going to, one, if we create a flat candle body support, two, that 1795 is a key level, and not just the fact that it's a key level, where we also had this previous support created an upside move. So to get a retest of that exact same area, which would line up with bullish market structure, you have about 3 confirms there to make it more of a high risk buy. The safer buy would be you wait for that lower time frame support, you wait for those buyers to jump in the market and validate the respect to that structure and level, and then you would wait for the breakout or retest, break and retest of 1803. The safest, least rewarding buys would be you wait for that pullback or the consolidation and the break above previous highs. That's the safest amount of confirms, but the least potential reward. That's just the nature of the beast. Higher risk entries have less confirms, but can potentially give you more reward, right? Where the safer entries, you're essentially compiling more confirms and you're being more patient, but the reward may not be as much because somebody who was already in from here, they've already gotten the move to the previous highs, and you're looking to capitalize into a new impulsive move to the previous highs, right? It all depends. The reason why I give these various styles of entries is because everybody's financial background, trading experience, and risk threshold is different, right? Some people are very patient and are very laid back, and it can be good and bad. Some people are so patient to the point that they never execute on anything. They're always waiting for the most perfect scenario that's never going to come, right? And then some people like me, the way I used to be, are very impulsive and aggressive. We think there's never going to be another opportunity, so we take every opportunity we can see. You have to find the yin yang balance in between that, right? For me personally, I used to be on the impulsive, aggressive, high risk side. But I know people who are on the very, very safe, patient, and never execute side as well. People are on both sides of the spectrum. You have to at first be self-aware and understand where you are and be honest with yourself and say, do I have an addictive personality? Am I very impulsive? Am I aggressive? Do I get riled up very easily? Like when I'm looking at the charts or markets are moving, etc., right? If you check off yes for those, you are a more aggressive, impulsive trader. You have to find a way to balance yourself out, which is maybe going to come from waiting for your confirms. Maybe you're going to start waiting for more of the safer entries. That's how you can balance yourself out. And for the person who is way too patient and never executes on anything, the way you can balance yourself out is by starting with like $100 small live account. Make sure it's live, but make sure it's an amount of money that you can risk losing. Like the amount of money you're maybe going to go out next weekend to buy beers with your boys. Instead of that, put it into an account and trade penny lots and just practice executing. Even if you don't have as many confirms, just on that account, just practice entering the market. I'm talking about for the people who are scared to execute, not for the people who are aggressive. I'm not telling you to trade more. All right? So keep that in mind. So that's why I like to give those various styles, because when gold pushes up here at London Open, it can very well reject here and then start to give a sell-off right back down to 1805. The reason why it's higher risk is because you don't have as many confirms. Your only confirm is there's multiple reasons why it's higher risk. One, you're going against the current bullish trend as highs are being printed and bullish market structures being respected. You're essentially trying to call a top at an area where you've seen rejection already. Two, the only confirm you have is rejecting that price point and near that bearish market structure we are talking about. All right. The less confirms you have, and especially if you're counter trend trading, the higher risk. But it is potentially higher reward if it starts to go your favor of what we want. Because if you took that sell entry there, instead of waiting for here, you've already cost 60 pips, and then this is like a 160 pip trade if that was to take place. My trading style changed as I started to play with more money. As I developed my capital and as I started to use bigger lots, I didn't take as many higher risk entries. That's just me personally. It could be different for everybody. All right. I found when I was using smaller lots, when I was using smaller accounts and trying to develop that, and it was a dollar amount that I wasn't as scared to lose, I was more likely to take those higher risk big ballsy entries, we'll call it. And then as I started to use bigger lots, have more capital in my account, and actually have more of an emotional attachment to the amount of money in my account, I didn't want to take those higher risk entries because it would bring me stress and anxiety. I would be tripping out with this 10 lot at this high risk big ball entry counter trend trading. You know what I mean? Like, fuck. Like every minute I'm watching it, like shit, like I'm still in profit, but this could go against me any minute. Do you understand? We don't trade specific stocks, but we do trade the stock index as a whole. But right now we were just doing gold analysis to start. Now we're going to go to GJ and GBPUSD. We're just going to keep an eye on gold here in this little lower time frame range, and we're going to be watching the London Open in 6 minutes. All right. Yeah, do you get what I mean? It's a lot of trial and error, and your trading style, your view on the market, it's going to change. And I hope it changes in a good way and you mature with the markets. Yeah, we can do like a GameStop analysis later. Is gold better than silver? I just did a full, like, I don't know how long the webinar was. It was probably like 40 minutes of just breaking down silver for the private chat. I really don't want to talk about it again. All right, guys. Now, remember at the start of the webinar where I was talking about our safe haven currencies being weak because of the market optimism that has kept our global stock markets bullish as well as the central bank support. Listen, whenever the central banks give money to the governments or give I've been before I start Nick Lav. I've been working since I was 14, and like I've always had a full-time job. So I've always been saving money on the side from that, and as well as when my trading got consistent, I would always withdraw and develop and grow the capital in my bank account. There was too many times where I would personally run up a small account to a large amount, not cash out, not withdraw a dime, and then get greedy and burn the whole account. So from that mistake, I learned to any profit withdraw and save it in my bank where I can't touch it. You know what I mean? Remember, you could secure profits and you could secure the money in your trading account, but until you withdraw, there is the risk you could be a dumbass. Because at the end of the day, we're human. I've done it. You guys think I'm so smart, but I've run up accounts from $1,000 to $15,000, $20,000, and lost it all as well. Not withdrawing a dime out of it, just wanting to taking 1,000 to 20,000 over a certain period of time, and then wanting to take that 20,000 to 50,000 the next day. The greed never stops. The same amount of time that you can lose $100 on your small account, somebody can lose 100K on a big account. The same amount of time. We've seen it. You know what I mean? But anyways, so guys, ever since the pandemic, markets have been priced in, central banks started to support their respective economies. The way they do this is by giving out by selling IOUs. Okay? A corporate or government bond at the end of the day is an IOU. So let me explain this. The way the government gets money from the central banks is by selling a government bond that could have a maturity of 5, 10, 15 years and has an interest or fee on it. So the government goes, hey, central bank, here's an IOU of 5 years. We'll say it's a maturity of 5 year, whatever it will be. I'm trying to simplify this just so everybody understands. The central bank who prints the dollar goes, okay, government, here's $5 billion for your 5 year IOU. I want that paid back in that maturity at this percent rate, right? The government takes that money from the central bank, and what they're supposed to do is put that back into developing the country, developing the infrastructure, developing jobs. What they instead do is take a good chunk of that money and put it right back into the markets themselves so the 1% can get even richer. The same idea for corporate bonds. When a central bank purchases corporate bonds in the masses from the government that gives it to the corporations, it's essentially IOUs. The corporations and the governments essentially are taking loans out from the central bank at maturity rates. Okay? Just like you go to your local bank to get a loan is the same way these governments are getting loans and operating with the central bank. It's no different. It is all debt. It all has no value. It is digital. They can print out as much as they want. They can dictate the price of it, the inflation, the deflation, the demand. So what we can learn is we can't fight these central banks. For example, and don't worry, guys. Don't worry. We'll see some trades to execute on. It's only London Open, start of the week. Let's focus on the knowledge, and then and as trade ideas set up, we'll execute, right? So an example of this is come here and go to the trade room and look at Bank of Japan. Where did I send it here? Okay, look at this. Bank of Japan's Governor Kuroda. So obviously Japan's central bank. They are openly saying that they have latent profits on Bank of Japan's ETF holdings. For those of you who don't know, their ETF holdings are essentially purchases of the Japanese stock market. They are purchasing stocks in various industries of the Japanese stock market to keep it strong, right? They are roughly in 12 to 13 trillion yen of profit. Roughly $100 billion USD And you can see that here, right? Right here. Bank of Japan Kuroda, based on their rough estimate, Bank of Japan's ETF holdings, they won't incur losses unless the Nikkei average, which is here, drops below 21,000. Do you guys want me to am $20,000 in profit on my Japan stock market buys? My stop loss is in profit at 21K. I won't take a loss until Japan stock market drops to 21K. That's what they are simply saying. They're just using big words to say it, but they are saying, hey guys, we won't take losses on our Bank of Japan. Bank of Japan saying, hey guys, we won't take losses on our Japan ETF holdings unless Nikkei, the average of Nikkei, falls below 21,000. And they are saying currently here, our holdings of the Bank of the Japan stock market is in around $13 trillion of latent profits. Can you guys read that? 13 trillion yen is 100 billion USD. The Bank of Japan just said we are 100 billion US dollars in profits in our Japan stock market buys. Now, think about this. Listen to me guys, when the central bank is doing that, and they have the power to do that, as soon as they give money to the government, more money to the government and more money to the corporations, what do you think those officials in the government or those corporate heads are doing? Do you think they're taking that money and they're going to create jobs? Or do you think that they're going to put that back in the economy? Or do you think the majority of that is also going into the stock markets? They also want to ride that wave. So as the central banks are printing out more dollars to flood their stock markets and keep that afloat and keep the 1% happy, and as they are giving money to the governments and to the corporations, the corrupt corporations and governments also go purchase the stock market and ride that wave. So you see this same bullish essential trend and structure across every region across the world. China stock markets, Australia. If you go on the higher time frame and look at the stock markets, bullish. All right. So it's very interesting to see. So with that being said, you can't fight the central bank. You can't fight the central bank. And that is the reason our safe haven currencies have been extremely bearish and pairs like GJ have been extremely bullish. It doesn't matter if it's GBPUSD. It doesn't matter if it's AUDJPY, right? It doesn't matter if it's GBPJPY. The structure has essentially been the same on the higher time frame for all of those pairs. Does that make sense to everybody? So GJ has only had corrective pullbacks every time a high is printed. Every time a new high is printed, you have pullbacks. Do these pullbacks ever break structure? Right? Overall, you have this very strong bullish market structure. Every time you have a high printed, you have a pullback. These pullbacks do not break the overall bullish market structure. Every time you have a pullback, all you have going on is buyers exiting positions at the new highs and sellers jumping in to push price down to a better demand area. Usually that demand area ends up being a previous high point, and then you continue right back up. So GJ has been only doing two things since March: pushing up to create a new high, doing a pullback, usually a 50% correction to a demand area, then continuing right back up. Or pushing up to create a high, consolidating, generating liquidity, and pushing up to create a new high. That's all it's been doing. Simply that. As long as there's that Brexit optimism, as long as there's that central bank support, as long as the global stock market is bullish, GJ is going to keep doing that. Yes, we might get some aggressive pullbacks here and there, but as long as the overall structure is not broken, it is bullish, and we have been playing the buys. And now I want to prove this on a pair that's completely different, like Euro USD. Euro USD GBP in it or JPY, but what does it have? The same concepts. You have a risk currency of the euro against a safe haven currency, the US dollar. So it's only been doing two things. You go to print a new high, you consolidate and generate liquidity, and then you print a new high. You consolidate and generate liquidity, then you print a new high. Instead of having a consolidation zone, we went to have a pullback here to retest that previous high with potential to continue right back up to these previous highs. Any risk currency against safe haven pair, if you want to go look at AUD CHF, if you want to go look at AUD JPY, if you want to look at NZD USD, it's going to follow this similar macro structure because of that fundamental concept of market optimism, central bank support, and all these buyers running on this optimistic greed train. Okay? So now when we look at GJ and you guys understand that, obviously we are bullish on our GJ bias here. Let me just clean up some of this mess. We have broken out of some of this corrective bearish structure. So we're still respecting, obviously, this lower time frame bullish structure. And we've broken out of some of this corrective bearish structure. But where are we reacting to right now? Previous highs. So that little London squeeze up to those previous highs was good. But I would like a retest and support at 148, then continuation back up. I am still looking for GJ buys. Even if we got a more aggressive pullback to 147.8, I wouldn't take advantage of the sells down. I'm looking for buys. I'm looking for buys at 147.8 if we get a deeper retest overnight and a lower time frame support. I'm looking for buys if we get a lower time frame support at 148, and I'm looking for the safest buys if we can clear these previous highs and above 148.2 and go to print new highs. All right, you're gonna see this type of behavior happen a lot, where once a new high is printed, GJ can either enter this consolidation stage or it can enter this corrective pullback stage. The pullback stage, like I was showing you guys zoomed out, it just pushes price down to a better demand area for buyers to jump back into the market. As long as there is no fundamental catalyst to change that higher time frame trend in sentiment. Have we had any Brexit negativity? No. Have we had any more like real market fear compared to what we saw at the start of 2020? No. All of that has been digested. All of that has been priced in, right? I would only be looking for GJ sells if we have high risk sells, would be if we get multiple rejections at these previous highs, but I would only be looking for GJ sells below 147.8. Otherwise, I'm looking for these three price points for buy areas and continuations back up. When you're looking at some of our and the fact that Japanese yen standalone has been quite bearish. And we're going to keep an eye on the US dollar overnight and understand that it's just 9 minutes into London session, so no rush here just yet. And I want to look at how some of these hourly candles are opened up and closing. Okay, so GJ, I'm primarily in a buy bias. Safest buys would be obviously if we break above 148.200 and break into a new high to catch that next impulsive move. Otherwise, I would primarily like to wait for a pullback and lower time frame order block and support formed at one of these psychological price levels. All right. This was a great entry a couple of hours ago. This break and retest at 147.8, but obviously we weren't even on this live stream. That was like late Asian pre-London hours. That was a nice little double bottom there I'm seeing. Right? So this is what I'm talking about. You can see that GJ was respecting this corrective bearish structure, but now we're starting to show some more refined lower time frame bullish market structure as well. So I wouldn't even be looking for GJ sells unless we came below that 147.800 price point. I like how we're having some nice impulsive moves. I don't like how we failed to break this previous high. But if we could come get a retest at 148 and create a lower time frame support, similar to some of these rejections here, or like a lower time frame support like this, or a quick retest and bullish candle like that, or a quick lower time frame support, I'd be looking for buys from here, or now buys above 148.2. If we break above 0.2, we're trying to target 0.500 as the next range up. The best buys would be if we get more of a pullback to 147.8 again. But we're going to keep an eye on this overnight right now. And we're going to be watching this lower time frame price action as we're having some strong reactions at 148.200 for now. Gold, we had the previous hourly candle close bearish. This candle also already created an upper wick, but it's coming to retest those candle body lows. We still need to come below this 1 minute price point to start seeing any chance of safer corrective sells like we were talking about, okay? Because we could end up just bouncing here off the support zone and then continuing right bullish again, okay? So just doing that pullback after peaking these new highs. Someone said gold sell off. Fuck, man. I like teaching people things, but some people's perspective on the markets is just fucking... It's just fucking retarded, to be honest. All right, so let's keep an eye on that. We'll keep an eye on gold here as well. If we how we react at 1806, if we create a flat candle body support here for a potential bounce, or if we break below to start taking some corrective sells down. We are starting to create some very minor bearish structure, but nothing too crazy. Just with how these lows are getting smaller and smaller here. I'm sorry, these high bounces. GBP USD. Similar idea to GJ in overall higher time frame structure, and the fact that we've just been having these pullbacks and continuations to the upside, right? Our risk currencies are strong and our safe haven currencies have been weaker. We understand that when we're looking at the US dollar and Japanese yen on the higher time frame, and we understand that investor confidence when you're looking at how bullish the UK stock market specifically has been. Even though it's starting, this is on the hourly chart. If you guys like zoom out here, you can see how bullish it's been overall, right? So this is showing us that there's still a lot of investor confidence in the British pound, hence why we've only been having pullbacks or consolidations and then continuations to the upside. So pretty much what I'm looking for on GU is a retest of these previous highs and continuation back up. You can see we already had a clean break out of this consolidation and corrective stage, and we're trending very nice and bullish right now. I would like to get a retest of 1.404 and continued buys. Maybe not even right to 104 to these candle body lows. And line up with this potential lower time frame bullish market structure. But if we were to break below here, there's a 45 pip sell scalp available. Only if we break below this bullish market structure, these 1 minute price sensitivity areas, and to retest that higher time frame key level for a deeper correction on GU. If the US dollar has short-term strength and we break below here, then there's sells down 48 pips to 1.404. Otherwise, this is a great bounce buy area if we fail to break this area. But I don't want to enter anything at this current high point that we're sitting at. I would rather wait for the pullback to around 405 area here. Okay. And Euro USD, similar idea. Higher time frames are extremely bullish, but as we hit higher time frames extremely bullish, but as we hit this previous intraday high and created this new high in recent price action, we started to get more of an aggressive pullback phase, right? Shit, man. Right here. So overall, we're very bullish. Euro USD buyers on the intraday printed new highs. We had a pullback. This pullback went to revisit those previous highs as buyers jump back in and we break above that corrective structure, right? So now we can see that that pullback in corrective structure has been broken with buyers jumping back into the market, breaking above the bear structure and retesting that broken structure and failing to break lower, developing this bullish structure. We took advantage of capital hungry on the retest buys of 1.21, and now we're sitting at a previous price sensitivity area around 1.218. I would only see safe buys above 1.218 up to the key level 2195 and then continuations back up, or if we could get a pullback to 213. If anybody's looking for high risk corrective sells, that's only going to come from if we have multiple failures to break this area. US dollar strength and a break below this 1 minute price sensitivity area, and even that would be about a 30 pip range down to 1.213. So currently on EU, for any scalp potentials, I am looking at this decision point that if we break below it, there is the potential for a deeper pullback to 1.233. If the dollar holds strength overnight, which we're going to be watching it on the 30-minute chart, it is looking like it has some bullish potential here to do a pullback. So if the dollar shows us strength overnight and Euro USD also breaks below 1.216 area, there's about a 30 pip scalp down to watch the ranges. I would first be watching if we do break below here, your reaction about 15 pips down at this previous price sensitivity area, and then the next little medium term zone. All right. Similar idea to GU, except for GU, I would only be looking for the sells below 1.406 down to 409 key level. And that's only if we have that US dollar strength overnight to create these pullbacks on our US dollar secondary pairs like GU and EU. All right. GJ also looking like it's going to give us our pullback. We're going to watch the reactions. The new 30-minute candle at 148 flat. So no FOMO, no rushing trades here. Euro USD is just reacting to these low points. Obviously, if we just consolidate and fail to break these lows, we're taking buys above that 2175 point. We are not playing this little lower time frame range where it's just bouncing around up and down right now. Okay. The reason I didn't label it anything compared to previously is because people can always rewind this webinar and watch any of the analysis or trade ideas or anything I'm talking about. And because we started the stream a bit later, I got stuck with all the snow and shit that was going on here. Jeeve, what about the weekly wick? Let's go here. The weekly candle already has a lower wick on the Owanda feed, and the fact that this previous weekly candle closed without a lower wick and extremely bullish above these previous highs just shows me a lot of bullish momentum. So we don't even essentially have to create that much deeper of a lower wick here. With the amount of liquidity we've had grabbed in this area and then this very strong bullish momentum from last week, it's still looking very bullish in my opinion. Where do you guys get info to determine the fundamental bias? Are you talking about how we determine the markets are optimistic or any of these headlines? So obviously in the Capital Hungry private channel, we have these headlines to the left. Now, whether you use a Bloomberg terminal or you use a free Twitter feed or you use the Capital Hungry news feed, there's always going to be tons and tons of economic headlines throughout the day and throughout the night. All right. Not all of these headlines are going to impact currencies or trading instruments that we are trading. And even sometimes the headlines might only have a short term impact depending on what the catalyst is. All right. So we determine the fundamental sentiment and bias based on multiple concepts. One is market sentiment by looking at the flow of money and liquidity through certain trading instruments, such as safe havens. Another is looking at the inverse and looking at the flow of money in heavily optimistic impacting trading instruments, such as stock markets. And then another is combining that information by looking at reactive headlines and digesting, is this headline a positive impacting factor for this currency, or is this negativity? Right? But yeah, Andrea, you have to watch the educational webinars because there's 50 webinars on this. For you, it will be... No, you have it. Don't lie. Don't lie to us, bro. Because what you asked about is market sentiment right now. And that's something we talk about in Capital Hungry every day, every week. You know what I mean? Don't lie to us. When did you join? Didn't you just join a couple weeks ago? Or a week ago? 8 months? How come I just seeing your name now? Yeah, how come we never heard it? Anyways, the one in the Capital Hungry private channel, the one that is going to help you is market sentiment, tools to read market sentiment. Market environment and the volatility. I don't know where the volatility webinar is. It's somewhere here. But there's about 4 of them. There's about 4 of those webinars here. These ones will teach you about reading that fundamental bias. Didi, I thought you just joined. Okay, Didi, I know you didn't watch the educational webinars because you're the guy that always sends a chart about your own little style that you trade. Right? That always that London sweep and then take the sells once those traders get sweeped out. I know you didn't watch the educational webinar. You trade your own style, right? But all those resources are there for you in the Capital Hungry private channel. Gold still failing to break these previous lows. My question was more obvious. I know we look at stocks, news headlines, but I've started reading an extra hour of news articles in the morning. Just read the news terminal. What news articles are you reading? Can you send me an example of a news article you're reading? How's it going, Gloria? How are you? I was on vacation last week. France, how are you doing? I wasn't on the charts or Capital Hungry or anything last week. Like, give me an example. Like, send an article you read, or what articles you read. Yeah, it's all good. I'm just asking. I'm just curious. You know, nobody is knocking you. I just didn't see your name because like it's obviously you changed your name up. Okay, let's go. Now we know what we're looking for on GU. Euro USD, we know what we're looking for. We're going to zoom in here. Let's go to US 30 and USD CAD. Oh, I need a Bloomberg account, don't I? No, I don't. Oh, shit, I do. Fuck you guys, man. Bro, just let me read the title quickly. You have a Bloomberg account? Actually, I don't want to use your. I don't need your login. Yeah, all this stuff, like Andrea, it's good for. Okay, Bloomberg is a good resource, but you have to understand that Bloomberg's public website is going to post the information way later than the Bloomberg terminal or the news terminals. Okay? Remember, Bloomberg has a terminal and a service where it charges almost $40,000 a year for their news headlines and their information. All of this is after the fact. So this is a great resource for you to learn and read the information, but I suggest while you are in capital hungry to use the news terminal, because if you come to the news terminal and you search Sanak, you're going to see it before Bloomberg posted it. February Bloomberg, or let's go here. Sanak, which one? This is it. This guy was talking. This guy's been talking all week. You know what I mean? But if you want to search up this guy's name, if you want to search up unemployment in the news terminal, you will see all of this information that you can read about first. All right. The private channel is not for brand new traders who have no idea what a pip is or no idea what a chart is. I don't have any webinars. I don't accept those members into the private channel. For one, I send them to what's it called first? Baby Pips and Wickstone live streams, right? And for anybody else, like once you understand the basics, once you understand what a pip is, once you understand what a chart is, once you understand the basic jargon, everything else that I do is in these 50 there's 50 educational webinars in Capital Hungry. But these educational webinars aren't on like how to map out support and resistance or where to put your stop loss or what a stop loss is or candle, you know what I mean? Does that make sense to you guys? So if you guys want to join the Capital Hungry private channel, but you are completely new to trading, this is not for you. Do not sign up. If you do, I will give you a refund and I will send you a Baby Pips link. I don't have the time to go through like the ABCs. If that makes sense to everybody. But if you already have a basic understanding of the charts, what a pip is, you know what I mean? Like if you already have a basic understanding, or you've gone through Baby Pips, or you watch Raquel's webinars and stuff like that, and you have like some type of base knowledge, and you want to learn more, then if you're new to the fundamental side, then Capital Hungry is for you. If you're new to trading as a whole, then it's not for you. Because you have to look at some of these webinars. There's no webinars on like support and resistance. There's no webinars on Fibonacci or EMAs. There's webinars on like fundamentals, trading psychology, market structure and road mapping, understanding the lower time frame, market sentiment. You know what I mean? Market environments, pricing in concepts, historical analysis, central banks, etc., etc. The transfer of wealth, oil, information like about oil and how it impacts the markets, gold, etc., etc. How to map out key, you know, all these white lines that you guys are like, wow, those key levels are so great. How to map those out and the reasoning behind it. You know what I mean? You can see the titles here. Candle bodies, brains, key levels and trends, key levels, trends, understanding lower time frame, psychology, market correlations, how and why to do analysis, tools to read market sentiment, measuring economic impact, key levels, market seasonality, historical analysis. Yeah, that's me. You guys don't know what I look like? Should I take a picture right now? I got a new phone. I got an S21. It sucks ass. I really want to return it and go back to my old Samsung. I used to be on. This is when I used to be on Instagram. Yes, if you guys want to send me your charts, like how Mr. Tomer's doing here, I will look at any charts or anything you guys want to show me. Hey guys, EU, let's keep an eye on EU because it's potentially breaking below that price point we're looking at for sell scalps down, and gold is slowly starting to come towards 1806 for potential sells below it as well. Let's keep an eye on this, all right? I left social media. I used to be on Instagram. I used to have like 20,000 followers on Instagram. I used to do a lot of IG lives about global corruption and information, but I got involved in way too much. I got involved in way too much trading community drama with all these marketers. And man, like fucking social media is toxic. Unless you make money off of social media, there's really no use for it. Everybody just makes an excuse. Oh, I like to talk to my friends. I like to talk to my family. Like you can text or call them. And unless you make money off of social media or off of IG, there is zero use for it. It is just toxic. It just wastes your time. It just drains your energy. It just gives you false expectations of the world. It shows all these fake lifestyles. It's just really demoralizing. Right? You guys want to see a picture? You guys want to see a picture of your boy, eh? Let's see, let's see, let's see. Let me also I'll flex. It's just extremely toxic environment. Oh, sorry, I'm looking for something on my computer here. I don't know where the fuck it went. Fuck it. Nope. I'll just take a fresh picture for you guys right now. I should get a webcam, but I don't know where to put the webcam on the screen layout. Should I get rid of something on the layout? Honestly, Lumiere Holdings, I'm skinny now. I took a flex picture for you guys, but I don't want to share it because I look a lot smaller than I thought. No working out has really led to some damage here. I'll share this picture because I look like a stud in this picture. I look like a badass here, you know. For you guys who want to see what I look like so bad. And for anybody in the banter chat. You know what I mean? Guy's a little bit of a stud. No, I took a flex picture of my arm right now, but it was very disappointing. Yeah, man, look at this guy. I'm a stud. Whew! Hide your girls. Hide your wives. That's why I don't go on video, you know what I mean? Roger guys, Awanti guys can show their video because they're ugly. No, Raj, no, don't choke with them. No, I don't want you guys to save these pictures. You know, you guys be doing some weird shit. All right, Mr. Brindy, you are looking at Euro NZD. You are looking, market is bullish. You're thinking about executing on buys if we closed. No, I don't smoke cigarettes. I don't smoke cigarettes. I gotta go to the washroom, guys. One sec here. There, you guys, Banter can see it from a live stream. This is from a live IG. This is from a live IG I did with Raja. A test. You guys got 1 second to measure the size of my arm. You guys got 1 second. 5 seconds. 5, 4, 3, 2. Don't laugh at my chest hair. Don't laugh at my armpit hair. I'm a man. Gone forever. I know somebody screenshotted it, but fuck you guys. All right. I need to zoom out here a bit. Honestly, Euro NZD, you guys have to understand when you're trading a pair, when you're trading a risk currency against a risk currency. Huh? Yo, listen, we've been on lockdown. My bicep shrunk, all right? When you're trading a risk currency against a risk currency, you have to be very cautious about these whipsawing moves. I would personally be looking for sells only below this previous low point because, like you said, it is trending bullish. What you can identify is that a new high has been printed, right? So I would not be looking for sells unless we came below here. I would only be looking for a lower time frame support to be formed and continued buys to revisit these previous highs in this overall bullish market. You can even see the difference between the bullish and bearish candles where it's a lot smaller and more corrective, and then you have the impulsive buyers jump back into the market, right? So your trade idea for sells below this makes sense. Otherwise, I would be watching objectively for the lower time frame for a support to be created and then continuation back up to revisit these previous highs. Now, gold had a very strong bounce off that zone we are looking at and failed to break lower at that exact same price point for a 20 pip for a 20 pip bounce here. So no sells below there, but a nice initial reaction. All right, so no sells below. We might get another double bottom for some buy scalps. GJ on this new 30-minute candle didn't give us that exact retest of 148 flat, but it does look like we're starting to create a bit of a flat candle body support. I just would like that retest at 148 before we continue up. GBP USD, we weren't touching at these highs. We're watching to see our reaction at the retest of bullish market structure to see if we respect that area and then can take buys to continue back up. Or we're only taking sells on GU if we break below this price point, showing exhaustion at the highs, a break below this 1 minute price sensitivity zone, and a break below that long-standing bullish market structure that's been respected. That is a 40 pip range down to revisit the key level. Otherwise, this is a very key decision point we're going to be watching lower time frame price action at. So far though, into London session, 40 minutes into London session, pretty quiet, pretty shitty London session in my opinion so far. Hopefully we get some volume kicking in the next hour and a half. Euro USD is starting to give that little bit of a sell squeeze, but it's only up 8 pips below that zone we're looking at. You can see we're starting to react around that previous price sensitivity area, and we're starting to slowly make our way down, which is nice. We were looking for the sells from the 1.263 area here, but again, it's not looking like we're seeing strong sellers impulsive candles. We're seeing very mix of bullish and bearish candles, and the bearish candles are starting to get weaker as well. You know what I mean? So London so far is looking pretty shit. What's this guy want? Let me close it. Yeah, London so far is looking pretty shit. I want to see how we're going to react at this 1806 low again. If we break below, we're going to take those scalp sells. If we reject that that's exact same price point, there is the buys option available to start riding the buys back up. But this is a very key decision point on gold. This is a very key decision point on EU we're watching just through the intraday time frames. 148 we were watching, but instead we started to create a flat candle body support just a bit above the PPL, if anybody was watching that. UCAD we did not discuss or talk about yet, so we're just going to stay off that. I just got to go to the washroom. When I come back, we're going to do some US 30 analysis, all right? When we're looking at the headlines to the left here, we haven't had any real high impacting headlines. These are just generic economic headlines that we get day to day, central bank activity from countries that aren't really impacting us. But other than that, we don't have too much going on that's impacting Eurozone or impacting some of the main currencies that we are looking at here. Make sure you guys focus on staying smart. The same trade ideas that we are looking at now, even though we could potentially range through London, stay emotionally neutral and stay objective, right? If we are ranging right now and we are not getting the confirms that we pre-planned, stay out. Don't force any trades. Don't stress yourself out trading a ranging market, and don't get angry at something that's out of your control. These same trade ideas and analysis that we shared across these pairs is still very much valid throughout New York and the following Asian session. So remember, the market is always here. No matter if it's a pandemic, no matter if it's a physical war, it doesn't matter what's going on in the world, the market is always moving. But your capital may not be here if you end up being a dumbass and burning through everything you have. Okay, so stay smart and wait for those high probability setups and take advantage of that. Don't just look for every single trade possible and keep jumping in trades nonstop and being a gambler. The more active time you spend in the markets trading, listen to this carefully, the more active time you spend in the markets trading, looking for trades, entering trades, closing trades, the higher potential you have of losing. The same probability that when you are winning at a casino and they start offering you drinks, they start offering you a dinner, they start offering you a room to stay in, so you can spend more time in the casino and have an increased probability of giving all of your winnings right back to the market, right back to the house. Trading is no different. Think about it like what Rakeel said, or I've said before. It's like going into the ring, into the boxing ring with Mike Tyson in his prime. Are you gonna win? Fuck no. Are you scared for your life? You should be, and you should have a respect of who you're going against. What you can do is take little jabs here and there and then back the fuck up. All right? So just remember to keep that in mind. and also your stream reminders. And of course, the economic events. We have the Euro CPI. We are going to keep an eye on at 5 a.m. Eastern. Yeah, there's a big confusion in what Timbuk2 just said. That trading frat guy, he does the YouTube streams, but for more stocks, right? And this is very key. Trading the markets doesn't matter if it's stocks, currencies, crypto, bonds, oil, commodities. It doesn't matter. The basic concepts of psychology, greed, is all the same throughout them. Then you just go into that specific market and learn the details, right? Like the basic concepts of investing and trading from a psychological perspective are the same no matter what you trade. You just then go focus to learn the details about stocks or learn the details about currencies. Okay? Did anybody take that high risk buy scalp when we failed to break this area though? It's just ranging between these order block highs and lows. See how we have these rejections at this exact same price point multiple times? But anyways, we'll still have some opportunities to come. So just keep that in mind. Too many people confuse chart hours with active trading time. Studying the markets and reading about fundamentals. Backtesting economic events, right? Backtesting economic events. Doing analysis and dissecting market structure and technicals and all of that. That is your chart hours. That is increasing your chart hours, increasing your experience, increasing your knowledge. When you are actively in a trade or actively looking for a trade, this is a whole different mindset that you enter. Do you guys get what I'm saying? As soon as you enter a trade and you put a risk into the market of your money, your whole mind shifts. You are only focusing on that. You don't care about anything else. And you are watching that position. You are burning away your mental energy when you're in a trade. You don't burn any mental energy and you don't stress when you're just objectively watching the markets. You know what I mean? But anyways, I just gotta go to the washroom, guys. Obviously, gold didn't give us the break below 1806, but we were looking for a key area decision point here for buys anyways if we failed to break lower, as we just wanted the deeper pullback. Now, if you did not catch these buys, do not worry, because gold is still in this range for the last intraday period. The next buy option we are looking at is above 1812 and above 1816. The safest buys now are if we clear these previous highs. If we clear these previous highs, you can get an easy impulsive breakout scalp to like 1818, 1820. All right? But did that make sense to everybody about why we identified this area of how gold was bullish? We might not get aggressive pullback. We might just get a consolidation and reaction here instead. And this is a very key decision point. Did that make sense to everybody before I go to the washroom? Right? EU did a nice little retest. Still fairly slow and stagnant here. Yeah, that made sense. I know a few of you took those buys. Those are the higher risk buys. Because remember, we were primarily in gold in a buy bias. We were only going to take the sells if we broke below this area for a potential pullback. Otherwise, this was a buy zone. Hello, Hornito. How are you? Let me give Hornito some moderator powers. Because your only confirm here is that we are going to reject this previous zone and rejection point and then have buyers jump back in. This was a key decision point where we also could have broken lower and then gotten that deeper pullback for better risk versus reward buys at 17.95, but we didn't. Remember, the market, gold is bullish. The market can only move up in two ways. Either you consolidate and generate order flow and liquidity and break out, right? Or you peak a new high and then have a pullback and continuation to the upside, right? So what we were looking at here on gold was what? When we zoom out, we were looking at gold currently being in a consolidation phase after peaking a new high, right? I haven't even gone to the washroom yet. Amjad looks like Amjad took a loss. Guy's mad at me for going to the washroom. I didn't even go. But it's okay. I would hate me too watching me. So anyways, what we identified was gold in the lower time frame printed new highs, and then we started to enter this consolidation phase with higher risk buys at the low side of the consolidation zone in the order block. We were anticipating that if we broke below this point, then that would show us more potential for a gold pullback, for sellers to push price down to a better demand area, and then have buyers jump in from 17.95 in the retest of bullish market structure. But we did not get that. Yeah, if you now I'm going to the washroom. I've been talking for an hour and a half straight. I gotta take a piss, and I'm gonna go grab some water as well. I'm not. Why would I go? So you think that I miss these entries or whatever, and then I go take an entry in the washroom for 5 minutes, and then I come back. Like, what entry am I gonna be taking right now? When I go to the washroom right now, what's the secret trade I'm gonna be taking? Like, there's nothing. I'm just going to take a piss, bro. Like, I'm hosting a stream for hundreds of people for free, and I'm talking for hours straight. There's no secret. I'm just going to the washroom. I actually haven't even taken a trade in about 2 weeks. Because I was on vacation last week for all of last week, so I didn't trade at all last week. You know what I mean? Like, what do you guys think I'm doing? Like, everybody thinks I'm a robot. Like, I could just keep giving information. I could just keep talking about the markets. I could just break down every pair, look at every chart, stay up for every session, take every trade. Like, I'm a human. I'm a regular guy, just like you guys. Oh man, you guys kill me. All right, I'm just gonna be back in about 5 minutes here. Okay, perfect. Secret washroom trade is done. I got my 100 pips. No, I'm just joking around. All right, that's enough peeing. You ain't drink that much water today. Actually, Joseph, now that my ends are back open, like gyms and shit are back open, I'm back on the gym grind. So I'm eating 6 to 8 small meals a day, either chicken and potatoes or chicken and rice, or ground beef and potatoes or ground beef and rice. So I actually do have to shit quite a bit. All right, new hourly candles, guys. Just opened up 4 a.m. hourly candles. Let's see how these hourly candles are looking across the board. Make sure when you're looking at the lower time frames, you always zoom out. This is still looking very nice and bullish. Remember that consolidation zone and support we are looking at? We still haven't had any candle closures below that point. So if we could retest this area and we still fail to break, like this candle just makes a lower wick, I still see potential to go revisit these previous highs. We just have to be very cautious towards that low of that zone we were looking at around here. But the next buy option I would be looking at on gold is once this hourly candle makes its lower wick, if it can flip bullish above 1812, this is the next buy option I'd be looking for on gold, is above 1812. Or if we could get another double bottom, if we could get a double bottom, sorry, formed at this price rejection area we've been watching overnight. GJ. GJ had a nice scalp from the 148 area back up to those previous highs at 148.200. Hourly candle closed nice and bullish, if I'm not mistaken. I'm liking this, looking very nice and bullish. I also like how this new hourly candle does not have an upper wick yet. So I'm liking a few things here. One, that we're overall bullish. Two, the Japanese yen is bearish. Three, global stock markets are still bullish. Bitcoin is at 46. Wasn't this shit at 56 yesterday? Damn. Whatever. Still, I actually might buy the dip at 45K or 40K on Bitcoin. By the way, if Bitcoin goes to 40K and makes a support, I might buy that dip. But anyways, sorry, I was just reading that headline. I know somebody in the chat was talking about it. Lumiere or somebody else? Alejandro? Alejandro was talking about it. His Bitcoin. All right. So, anyways, back to GJ here. What I do like about GJ is this bullish price action. The fact that we are overall bullish. The Japanese yen is flat and the support created in this area. What I don't like is how we are rejecting at previous high points. So the same two buy options are still what I'm looking at. Meaning, I'm looking for GJ buys again at a retest of 148. If we get that, even if we don't go all the way to 148, we come to these candle body lows again, or the safer buys above 148.2. As soon as we break above 148.2 after that lower wick is formed and the buyers jump back in, I see us creating a new high at 0.500. Mr. Battergill. Hey, Jeev, I have a question. From last year, March, gold started to go up from 1450 ever since the COVID pandemic happened. Batter, I don't want to pronounce your name wrong. Battergill. If you rewind this webinar and go to the start when we were doing gold analysis, I was breaking down gold from the monthly chart to the weekly to the 4 hour, and I was talking about exactly what you're asking questions about how gold is doing historical repetition, how a lot of the fear and upside moves have been priced in, how it's in a corrective state. So it was, I think, about 15 minutes into the very start of this. If you want to go watch that and then come back, when I'm doing gold analysis, starting on the monthly time frame, that's when I talk about exactly what you're asking. All right, is that cool? Just so I don't have to like repeat myself again, you know, because I was talking about exactly that, about like the impact on gold from the trade wars, the potential of the Iran war we almost had at the start of 2020, then the pandemic, and then how all of that got priced in, the historical repetition we're seeing, the corrective state it's in. You know what I mean? All right. So GJ giving us that pullback, and this hourly candle has yet to create an upper wick sell. Very aggressive pullback, but I still want to see. It is the new hour, so I do want to see where we make that lower time frame support, and we're coming right back to that previous low point again, a previous 1 minute low point. I'm watching this 5 pip area, like 148 flat to like 148.0, like 148.05. Yeah, just rewind it, because this is a hard rejection at that same previous high. I just want to see how aggressive this pullback will be. And obviously wait for your minute candles to close. GBP USD, similar idea. We've still been waiting for the pullback for GU to 1.405 anyways. Gold gave that nice little bounce off 1806, but again, it's been in this range all night. Not too eventful of a London session tonight, eh? Pretty quiet so far. We will be watching the charts for another 2 hours, and if you guys want to send any TradingView charts, just send the code. I'll look at those. It's a quiet night. It's my first day back since vacation. I wasn't expecting too much. German Europe Minister Roth says we aim to end border restrictions as soon as possible. Bitcoin extends losses down to $46,000 a coin. Italy's December sales are up. Actually, it's neutral. Yeah, pretty quiet night so far. We have some continued talks about the vaccines. Man, how many vaccines companies are there right now? I think I can name at least 10. Sino's Biotech. We have Pfizer. We have Johnson and Johnson. We have the Sputnik V. AstraZeneca. These are just the ones off the top of my head. That was 5 right there, no? What are you guys talking about, QWERTY? Yeah, see what I was talking about here? It looks like we're just creating that lower wick. Oxford's vaccine, yeah, that one, Oxford. No, because there's a new one this time. There's another new one. That's why I'm talking about it. There's 2 more new ones that came out within the last week to add on to the list. You probably took all 5, eh? Can I ask a possible dumb question? If we have a pair like GJ, if JPY is bearish, does this create inverse pressure on the pair? What like do you mean like if JPY is bearish, will GJ go up? Yes, it will. I want to see what gold's doing in this area for a potential double bottom. GJ had a nice reaction at these candle body lows as well for that new hourly candle, looking like it was just making that lower wick. The EU sell scalps, they're active. Like it's like almost 10 pips. It's just fucking slow tonight. All right, guys. Man, if Bitcoin drops to 42,000 to retest these previous highs, if Bitcoin comes to here and then creates a support similar to this at 42K, I'll buy that. I will buy that dip right back up. You have to understand, this is just buyers cashing out, right? Bitcoin's still very, 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 very bullish. You're just having, like, see the same thing that happened here? Once we peak these 42K highs, that's happening here. You're having those buyers at those high price points after a strong rally liquidate positions and cash out of the market, creating that pullback. So here, once we peak that 58, almost 60K, they're closing positions and liquidating out, creating this aggressive pullback. And if we could come to like revisit this previous high at 42K, I see this as a very strong demand area for a continuation to the upside. You guys get what I was talking about? Because overall, it's still bullish. We're literally seeing this happen. Yeah, if we come to 42K, that previous high point, and we create an intraday support, I would take some aggressive Bitcoin buys there. If we retest those previous highs, fail to break lower after, because you have to remember, if we go back to it, you can say whatever you want about this sell-off. This is a bullish trend. This is new high. The same way you start from a low, buyers are in from this 20K price point, you extend to a high, and you have this impulsive move. This is a new high created. Buyers exit out positions at this new impulsive high. Sellers jump in to push price down to a better demand area for buyers to jump in again. And then you go back to revisit that high and potentially extend it to a new high. So we are having a exactly textbook bullish trending market. This is just that market wave of how we've peaked these new highs. We're starting to see some of those whales exit out positions. To me, the probable demand area looks like that previous high point around 42K flat. Now, keep in mind we do have a lot of price sensitivity in this area here as well. But I could see that continued short squeeze down to 42K flat. We still maintain bullish market structure, and then buyers jump right back in, and we go right back to revisit those previous highs. Right? Did anybody take those EU sells that we were talking about below the gray box area we were watching? At least you got 10 pips, you know? It's a slow night though. At least it's something. Yeah, Savannah, you know what else I noticed have you guys been watching the news terminal? Ever since this heavy hype into the retail trading market from both stocks and crypto, all of these crypto platforms have been having issues like Binance, Kraken. I've only noticed it because it's come up in the newsroom. It'll say like Binance is down for the last 3 hours due to this issue. Kraken facing withdrawal issues. Coinbase is facing deposit issues. You know what I mean? It's like they're fucking up the retail. It's like they're fucking up the retail population there. All right, gold. Now, let's be very careful about how gold is going to react at 1806. This initial buy play turned out great for that anybody who got that high risk buy. You got anywhere from 40 to 50 pips. Now, we have to be very cautious about the second reaction here. If we fail to reject, this will create a nice double bottom for another buy play. Again, same idea. If we break below these candle body lows in this gray order block area, then we're going to take those scalp sells only with those confirms, okay? So let's be very cautious about the reactions at this previous price sensitivity area for the second reaction we're getting in this new hourly candle. GJ is still just in this range between about 148 flat and 148.2. The new hourly candle gave a nice bounce off these previous candle body lows for about 10 pips, but nothing else really besides that. Euro USD, we just called these sells below the gray box. It's only about like 10 pips. Nothing much is going on there. Yeah, I'm gonna look at your guys' charts. Euro CAD. All right, I like this. We have an hourly chart here. Okay, let's break this down. I've seen your chart before because you have these volume candles. I like your chart is very easy to remember that it's your chart. All right, so we have this bearish market structure that you've already identified. So I agree with that. Now, this was a previous low that was created that you marked out as a zone. When we had this aggressive pullback and then sellers jump back in the market from this retest of bearish market structure, we pretty much went to revisit that previous low and didn't really break that much lower. To me, these are some very weak price action candles showing me sellers pressure is slowing down. Then we can notice more impulsive buyers candles. I think the better option you might get here is the buys above 1.53400 up to these previous highs and potentially higher on Euro CAD. I do see the Canadian dollar starting to give away a bit of strength because the Canadian dollar has been extremely strong due to the strength of oil, crude oil at like $60 a barrel. But even that is starting to exhaust a bit. So to me, I'm starting to see sellers starting to exit the market, more buyers starting to jump in, and more buyers pressure if we can break above this order block consolidation zone to the upside and remain above the bearish market structure. So I agree with your analysis here, but I am seeing more buyers pressure with how these lows, with how we didn't make a significant new low from this point, and how we got a very weak bearish price action here, as well as some bullish impulsive candles. We're also creating a support zone in order block here, where once you break out to the upside, we'll have another impulsive move. And I like how you mapped out the safer sell, which would be below this support that is actively being created in recent price action. So I like this analysis. Very nice analysis. I like the price points you're waiting for, how you're using market structure. Your observation of volumes is nice too. I personally just look at the size of the candles to understand the volume. But yeah, whatever floats your boat. GJ is just ranging on the lower time frame. GJ for the last pretty much hour and a half we've been watching it has just been ranging about 15 pips up and down, but we have been in a buy bias from these candle body low points and from 148 flat. And but obviously we're seeing exhaustion at these 148.2 highs, and volatility and volumes don't seem as strong tonight when we're looking at the fact that there's not that many economic data reports and there's not that many headlines to react to. Pretty quiet night to start the week off so far. This does make sense though, because it's the last business week of the month. And if you guys noticed last week, there was really strong impulsive moves on our GBP pairs, which was a shitty time for me to take vacation. You know what I mean? So if you guys noticed, there's nice clean moves on GJ last week, and the fact that this is the last business week of the month, coming towards the end of the month, and after having those strong impulsive moves, to see GJ ranging to start the week now and being a bit slower, or the markets overall being a bit slower, I'm not surprised about it, and it's not something I'm stressing out about. I do still want GJ though to create that upper wick we were talking about on this hourly candle, because you can see we had that deeper liquidity grab that went to retest those candle body lows, and it would be nice for this candle to flip bullish and create that upper wick. And it was really nice how we rejected at this exact same price point as well too again. Did anybody get another buy scalp on GJ there? That's what I like about the 1 minute time frame, is because as you can notice the reactions at very specific price points. If you got that buy scalp, I would look to secure some towards the top of the range and then leave your partials risk free. Okay, just be cautious about the price sensitivity at the top of this range. For anybody who did not get the buy scalp at these low points, if we break above 0.200, that's the next trade we're looking for. All right. Other than that, GJ has just been ranging from 0.200 to these candle body lows. So be very mindful and secure some scalps as partial positions and leave the rest risk free. If it continues up, then you're good to go. Yeah, we didn't get exactly on the 148 retest, but for the new hourly candle, we were expecting that we could also just react at these previous 1 minute low points as well. All right. Here comes gold now. Gold starting to break below 1806. Now let's see if we get a sell, adapt to a retest and a sell squeeze on gold. And this is probably supporting our EU sells to continue down as well from this point. So let's keep an eye on GJ to how we react at 0.200. If we break above, we're taking more buy scalps up. Okay, and let's keep an eye on gold. If we get a retest of these 1 minute lows and fail to break below and fail to break higher, we will get that sell squeeze down to 1803, which is about a 30 pip squeeze. Because what we can notice now is the US dollar is doing what the magic yellow line said, and is starting to finally show us that strength, and we're finally starting to see a bit of volume coming to the markets right now. But I don't want to jinx it. All right. Yeah, sure. Let's check this out. Can you look at GCAD? The breakout of the hour is nice, but any thought if it's going to reverse into a fake out? I'll give you my opinion on this right now. So remember that US dollar short-term strength can potentially help US 30 sells, gold sells, and EU sells short-term. But we didn't get to look at US 30 yet. I'd only be looking for US 30 sells though below 31,500. Looking to target these previous lows, and really what I want US 30 to do for the new month, even though it's extremely bullish, I would like US 30 to retest this bullish market structure at around 31K flat. But I would only be looking for sells on the US 30 below 31,500. All right. I just don't like how it's at these highs, and I would like a retest and pullback for the new monthly candle lower wick to potentially give us a deeper retest around like 3,500, 3,750, create that lower time frame and intraday support, and continue that optimistic train to the upside, you know, because we can't fight the central banks and we can't fight this flood of optimism. All right, sorry. Yeah, let me look at this. And do you guys see why I wanted you guys just to secure some partial positions at the top of this range again? Just to secure some partials, secure some profits, gain, and take that scalp. Now that you secured something at the top of the range for maybe 10, 12, 15 pips, if it comes back and takes you out, that's fine because GJ is still essentially ranging here. Have we created an upper wick? No, I still would like that upper wick created. It looks like we will too. How much time do we still have left? We still have 35 minutes in this hourly candle. I like this liquidity grab so far. We just need to clear these previous highs. But if you caught any of the scalps from this low point, that's why I advise just to secure some partials back at the top of this range and then leave the rest risk free. Just with how it's been ranging and how the week is a bit slower here. Okay, you caught above 148 back to 148.2. Nice. I like how your chart is very messy, but I do like how you're identifying structure and identifying corrective stages versus the impulsive moves. I like this. This is nice analysis, just a messy chart. All right, somebody said GBP CAD, sorry, about the fake out for the new hourly CAD. Let me answer this before we talk about the reversal you're thinking about. Anybody else want to send charts? Just send it. Zoom chat. I'll check it in a second as well. GBP CAD. No, this looks very nice. Like I was telling you, I do see the potential for some short-term Canadian dollar weakness, right? Like the Canadian dollar starting to fade out some strength, and we know that GBP is holding strength. One of the reasons why I would say this is not a fake out is because, one, we are trending bullish, right? If you notice GBP CAD on the 4-hour chart as well, we've been trending bullish. Where we have these corrective phases and then impulsive buyers moves to create new highs. Corrective phase, impulsive buyer move to revisit that high, right? Now, here, you can notice at the previous high, we were getting a lot of rejection and price sensitivity. But the pullbacks are getting significantly smaller and smaller, right? We are printing higher lows. So this is showing me the higher probability that this is not a fake out. If we could come down and retest these previous highs, and on the lower time frame, when you go to the 5-minute and the 1-minute, we create a support. And the way you can see the support is go to the lower time frames and look at the price action here. Go to the lower time frames and look at the price action here. Go to the lower time frames and look at the price action here or here. If we come here and see similar price action, that's buyers jumping in the market to continue the highs back up. So because the Canadian dollar's fading out its short-term strength, and oil is weakening a bit as well, and because the pullbacks are getting significantly weaker and weaker, and we're still overall printing highs, I am still seeing GBP CAD as bullish. All right, gold is still messing around here. Let's see what gold's doing. Gold is coming to follow the yellow brick road, and let's see how it reacts at the retest of this previous 1-minute low. If it rejects, we'll get those sell plays right back down. If it snaps back above this previous 1-minute low, do not sell it. All right? If you already caught these buys, don't take another sell trade on gold either. If you already caught GJ buy scalps, or you already caught these previous gold buy scalps, do not take another trade or over trade and jump in another bias. All right? We have to be very critical here about the reactions if we come back above this previous 1-minute low or stay below it to continue down to 1803. And GJ is slowly chugging its way up to these highs, which is good. If you have any runners, they still haven't been touched and they'll still be good risk-free. and you got to secure some partials at this price point anyways, right? Dow Jones coming towards 31,500. If we break below, I do see those sells if the dollar holds some short-term strength, and as we're coming towards the end of the month for that pullback. It would have been nice if we saw these sells at 31,700, but we were not paying attention to. I was not paying attention to US 30. That's my fault. But 31,500. If we break below here, we're looking for 200 points down, and then watching the reactions accordingly. EU still slowly making its way down for 15 pips, just giving us a pullback on these new 30-minute candles. Keep in mind when you're watching the lower time frames and scalping, be very mindful. BlackRock comment. BlackRock also downgrades euro area peripheral bonds to neutral. BlackRock turns neutral on European equities. Okay, so BlackRock is a hedge fund. It's a private fund, right? Very famous fund as well. You could say they are essentially like very similar to some of these larger banks, all right? But what they are talking about here on the increased weight on bonds is they are talking about potential pullbacks to come to the global stock markets. They're not saying that the global. So first, BlackRock's position and these other banks' positions on equities have been optimistic and bullish. Now they are saying that at these, if this loads, at these all-time highs across the stock market, there is potential room for correction. So they are going back to a more of a neutral stance, right? And they are downgrading the value of what they see the value for those US government bonds that the central banks are purchasing in exchange for the money. All right? So they're pretty much just saying we see some potential for a bit of correction on the stock markets. That's it. They're not negative. They're not like going to a pessimistic viewpoint or seeing mass fear or seeing any economic uncertainty. They're just talking about after these excessive rallies that there is some potential for correction in simple terms. You know what I mean? Gold did a nice little retest of these 1 minute lows and failed to break up so far. GJ, we want to break above 0.200. It's gonna come. I think we're gonna get the GJ impulsive play pre-New York hours. This is the main key I was focusing on for what BlackRock said. And we just need GJ to clear 0.200 and we're good. The thing about that is, do you guys understand how GJ is bullish on the higher time frames and is printing new highs? Yes, it's annoying to deal with this consolidation, but this consolidation, this is order flow and liquidity generating in the market, right? If we continue to fail and we don't break these lows, what we can assume as traders is that this is buyer side liquidity generating in the market. So once we clear those high points and break above that order block, we have that next impulsive move that we can take advantage of. The only annoying part is that we are rejecting in this range, this very tight range here. You know what I mean? Look, Vinder's saying, I know the bank's institutional secrets. Okay, what are they? Like, what are some of their secrets? Hurry up, don't miss the tea. We're waiting for you, bro. We're waiting. Everybody's curious. Bye. Oh, is that the secret? Hurry up, don't miss the opportunity? Or is the opportunity like the secret you're going to tell us? What's the secret? Everybody's waiting. The suspense is building. Sure, let's check this out. Also, guys, keep an eye on GBPUSD for its pullback to 1.405 in the bullish market structure. Euro USD, I think sellers are still going to jump back in and we'll slowly continue to make our way down. But if you guys got these Euro scalps and you got anywhere from 10 to 15 pips, be mindful and cautious and leave the rest risk-free because the Euro data has been rebounding. So the Euro CPI, in my opinion, could be positive, could be more towards the neutral to positive side and just bring us right back into the range. So yes, this 15 pip, 10 to 15 pip scalp played out. It was extremely slow and it was very annoying. But you have to be mindful about that Euro economic data after. And US 30, we haven't had a clean break below 31,500 yet. Gold is still playing around here. Be very cautious about gold's reactions between these 1 minute lows. Okay, GJ, I don't want to jinx it. No, I'm gonna shut up. I'm just gonna shut up because I already jinxed it. Bro, why do you have to just tell us the secret you have? Jeeve, check out FinViz. FinViz. FOREX. So what is this? What is this? Is this the 5 minute? What's the hourly? What are these? What do these mean? What am I looking at here? Currency strength meter, or it tells you like when to buy and sell a pair. I'm being very iffy about gold here. I would have wanted to see some more impulsive bearish candles. I like how we're still below this 1 minute low, but I want to see some impulsive bearish candles now in the lower time frame. Otherwise, it's going to come right back above the range and we're going to stay out of it. All right. If you guys can see here, let me zoom in. If we remain below this 1 minute low, it's fine. But I need to start seeing some more impulsive bearish candles now. Otherwise, if we break back above this 1 minute price point, we will just continue back up in this consolidation range. All right. So I like this. I liked how we broke below, and I like this initial reaction here. But I don't like the last 3 minutes and 4 minutes of price action where we started to get a mix of bullish and bearish candles, and we aren't seeing strong sellers impulsive moves. All right. So be very cautious here that if we break back above it, there's no those sells are invalid, and I need to start seeing some impulsive bearish sellers candles. I need to start seeing some consecutive bearish candles, like something similar to this. Not this mix of bullish and bearish candles, and not this size of those candles, which is showing me weakness from the bears. All right. So that's why I just wanted to give that piece of information there, that this initial break was nice, this initial retest was nice, and this initial reaction was nice, but I did not like these 4 to 5 minutes worth of price action here. Now, if this candle closes bearish engulfing, this is still looking good. But I need to start seeing some more consecutive lower time frame bearish candles to see the probability of us going down to 1803 and lower. And be very mindful of exactly where we're reacting, those previous 1 minute low points. All right, so I like this now. That I like. But anyways, GJ, I really jinxed it, but the hourly at least made that upper wick now. So you guys get what I was talking about how the hourly for a scalp trade, how it opened up with no upper technical wick, and then it pushed down first to grab liquidity. So that scalp trade played out nice, but we need price to remain above 0.200 to extend buys to 0.500 next psychological price level. Now I don't like that. But it's still, so if we come back above this area, no sells, and we will just end up back in this range. We will end up bouncing back in this range like we've been doing all night, ranging on. You know what I mean? But that's only if we break above 1807. That's only if we break above 1807. 1807 is the key decision point we are watching in the lower time frame for any scalp trades through the rest of the session now. GJ hard rejection at 0.200 again. And now it's not looking as good because that hourly has created its upper wick and is rejecting that area again. So this scalp was good. This scalp was good, but the reaction at these previous highs is not what we want to see. We wanted to see more impulsive breaks and buyers pressure and momentum, which we are not getting. Fairly slow. Darren, on GJ or gold? GJ, I'm noticing that overall it's more bullish. I'm only noticing the bearish impulsive moves when buyers exit positions at this high point. You know what I mean? That's the only time I've been noticing the more impulsive buyers candles. Otherwise, it's been fairly bullish still. We've only been noticing some of those quick impulsive sells, but that still failed to break structure at these high points, at that previous intraday high point. Gold, as long as it doesn't break 1807, this is looking good now. Now this is looking good to go to 1803. I like this order block below this 1 minute low, and I like that we're getting more bearish candles right now. That's looking better. GJ, we can't take, if you guys don't have GJ entries from this low or 148, the next entry is above 0.200 here. So we had a bad reaction here, but if we could come back above, this is the next GJ buy we're looking for, is up to 148.500. EU is still slowly making its way down. Wall Street sells, I think, are also coming up, Reggie. I like how we're respecting this lower time frame bearish market structure. Once we clear these 1 minute lows, I could see some Dow Jones sell scalps as well. But the only thing is, it's just been shitty rain. It's like London's been shit tonight. So these trade ideas might not play out until New York, you know? Like gold is still bouncing around in this area. It gave this nice initial play. GJ's been in this range all night. GBP USD has been in this range since market open. And new 15-minute candles as well as the hourly candles. Gold is still teasing us, man. It engulfed this previous bearish candle on the dot, and it's just back in this range now. I say we just stay out of gold. because I don't know if this new 15-minute candle is just going to make a upper wick and flip bearish, but I don't want to play this guessing game now. Yeah, see that as well? That's why I said it was better to stay out of gold. This was looking very good to me, like for the sells, but like this price action has been very messy on the new 15-minute candle, and I didn't like this. What I did like was the fact that we broke below this previous 1-minute low in that zone, that we retested, that we created this little bit of a resistance, and I wanted to start seeing some consecutive bearish candles to clear these lows. But we had this bearish candle get instantly corrected in the range, and then the new 15-minute candle is just looking like it's creating its upper wick here, and we're just playing in this range right now. GJ back to 0.200 though. We might get that squeeze for a scalp on GJ. We want that. We still want those buys. Gold is just being fairly annoying on the lower time frame now, and that would look like it was the new 15-minute candle just pushing up and creating its upper wick. If you guys look here, the 15-minute candle pushed up first and created that wick. Yeah, GJ, we need that clean break above 0.200. We can start taking scalps to the upside. GU we're staying out of. Euro USD played out for like about 10 to 15 pips. I'm going to go fill up my water bottle here and also answer a couple of Telegram messages. So I will be back in exactly 5 minutes. Slow London session. Those intraday trade ideas are still very valid throughout the day, but a lot of the scalps, you have to be fairly quick, be in and out, just because of staying adaptive to the current volume and volatility with GJ, right? So with GJ, when we're observing it and we're observing some of these other pairs, and we understand that the volume and volatility is fairly slow, it's the start of a fresh week. It's the end of the month coming up. You don't want to start rushing trades, especially with scalps in these ranging or slower market conditions. So gold, watch that 1807. It's a key decision point. GJ, watch 0.200. EU, if you're in these sells, you can still continue to extend these sells, but I would suggest cashing out possibly before the Euro CPI in 14 minutes. US 30, we're only looking for the sells pretty much setting up soon below 31,500 if we can clear these 1-minute lows. Dollar still showing us some short-term strength and potential for a pullback. Global equities are just giving us some exhaustion across the board coming towards the end of the month. We don't have any high impacting headlines, but you guys can read those to the left here. And we don't have any more economic data after the Euro CPI until New York session. All right, I'm just going to keep the chart on GJ, and I'll be back in about 5 to 7 minutes. All right, guys. 5 minutes until the 4 hour candles close and all of the Asian markets close. What we got going on here? Gold, fine. Gold, fucking everything moves when I go take a shit, eh? Oh, GJ too. Yo, GJ followed the magic yellow line on the dot. Anybody catch this quick GJ scalp for 10 pips? So it looks like this was just that new 15-minute candle creating its upper wick like I suspected. We still pretty much remained below this 1 minute low point, and then we finally started to get that break below this little minor order block. Any of you guys get to catch a GJ or gold scalp? I advise to stay out of gold though. I don't know if you guys still took the gold sells once the 15-minute came back below. I thought it was starting to get very messy. But if you did you guys take it? We're starting to get our little sell scalps for some 30 points on US 30 as well, below 31,500. But that's only up about 30 points right now, 40-ish points. For the sells, for anybody who's in gold sells, I would like to target at least 1803. When I went to the washroom and I saw this upside move happen, it was just starting to look a lot messier to me. But then when we understood that that was the 15-minute candle just grabbing liquidity, and we still created this order block and resistance below that previous low, it looked very clean. Did it make sense though about what we were looking for based on the analysis and concepts on gold and GJ buy scalps? That's the important part. If you guys learn something, right? For GJ, we just have to be very mindful that we're printing a new high, but our ideal target would be 148.500. US 30, I do just want to start making our way back down to these previous lows here. Just be mindful if you guys caught any scalps right now. If you caught a gold sell scalp, if you caught a GJ buy scalp, or if you caught a US 30 sell scalp, be very mindful of the new 4 hour candles doing pullbacks that can come back to your entry. That's the only thing. If you caught them as scalps, secure some positions as scalps. But be mindful of the timing of the markets that we're coming towards the Asian session market close. India is closing up. And we're coming towards the 4 hour candles opening. The new 4 hour candles closing opening, and these ones closing. But yeah, those sells we were talking about from the start of the webinar from 1807 area finally played out when we broke below, and then we had this resistance created below it, and finally we started to break below this order block low. For anywhere, if you entered from 1807 or 1806, you could have got at least 20 to 30 pips on the downside move. GJ was cleaner because we were patiently waiting for the breakout entry of 0.200. We already expected this initial reaction, so it literally followed the yellow line on the dot, right? For the scalp squeeze that we wanted, which is good. We just wanted to keep chugging away to 0.500. Euro USD, if you guys are holding those sells from the start of the session, you're almost 20 pips at the peak low point of it. But keep in mind, again, the new 4 hour candles and Euro CPI is also right now, which just came out, I think. Or am I tripping out here? Is that a different day? It is neutral. It is neutral. Exactly what was the previous and exactly what was the pull. So it might just have not too much of an impact. Maybe we'll just get a pullback for these new 4 hour candles and then continue these moves. If you guys got to catch either, if you guys got to catch these first GJ buy scalps, or that new hourly candle GJ buy scalp here, or if you got to catch this gold buy scalp here first, or these gold sell scalps that we were calling out, make sure you send a like to the stream, you subscribe, you share it around. Remember that we pre-planned all these trades ahead of time. We did the analysis at the start of the webinars for what we are going to be looking for scalp trade ideas and intraday trade ideas, and why. So we always pre-plan our trades. We do our analysis. We figure out what are our distinctive price points of interest, areas of interest, and then we wait to execute. Overnight, if you didn't get to catch that initial gold buy bounce for 40 pips off this support zone we were looking at, you could have adapted to these break below and retest of this 1 minute low and zone sell scalps, or the GJ buys from these low points. We had multiple opportunities, or even before the Asian market closed right now, even 10 pips from 0.200 to 0.33 area, right? So if you got to take advantage of these trades, if you got to learn something, if you enjoyed the analysis and the information shared, make sure you send a like, you subscribe, you share these streams around with your friends and family. And the next one will be on Thursday. We're still going to keep this going for a bit. For another hour and a bit, but we're just coming towards the new 4-hour candle. So let's zoom out here and look at how these 4-hour candles closed across these main pairs, how they're opening up, and how we can use this information to potentially extend trades into a New York session and see what New York can bring us. All right. So GJ, very nice and bullish still. New 4-hour candle. I would love if it just makes a lower wick at 148.2, and then we continue our way right back up. Very nice bullish price action. Very nice support at our higher time frame key level. Very nice breakout of that corrective structure, and I like how we broke above those previous highs, and I like how we got some impulsive bullish candles. I would love to target 148.8 for the next new high to be created. You know what I mean? This is all being mindful that if we don't have any new market fear come into the scene, right? If we don't have any new market fear come into the scene, and markets stay fairly optimistic, then this all still looks good for GJ to continue up, GU to continue up. EU, I'm just looking for a potential deeper pullback before buys at around 21.35. But let's take a look at gold here. Gold, nice bearish 4-hour candle close after rejections, pretty much close to that bearish market structure we are looking at. It does look like we've already created a bit, not much of an upper wick actually. What happened to my mouse here? All right, so let's go back here. It does look like we've already created a bit of an upper wick at least. And if we break below 1803, I do see us doing a deeper pullback down to 1795. Now, 1795 is a critical decision point where buyers can jump back in the market, where you can see previously how gold has reacted whenever there's a very aggressive sell-off and dip. You have quite an aggressive upside move that you can see. Even here, for example, this is what I'm talking about. See here with this dip on gold? Let me clean it up so you guys can see the basics. The fuck is this disabled to the left side here? Why can't I click the left? The fuck? All right, see here, whenever you have these aggressive dips, gold enters this very strong bullish market structure for an extended period of time. That was a terrible line, but you get what I'm saying. So even here, when you have this impulsive sell-off, sorry, you had this impulsive upside move and then this very strong impulsive sell-off, as long as it doesn't break market structure, buyers jump back in the market and you continue back up to that high and new highs, right? So that is something we want to keep an eye on here. That I have a support at 1803. But if gold even does a deeper pullback to like that 1789 point and buyers jump in the market and we create a support, this could just be creating more defined bullish market structure and retesting that previous low point and pushing price down to a better demand area and continuing back up, right? And something else we want to be mindful of is this area itself around 1803 is a higher time frame support and key level. All right. Sorry, I didn't mean to move all that. Yeah. Oh, if any of you guys sent charts and I missed it, just send it again right now. I'm going to look at those right now. So the 4 hour on gold, I would like to see us do a deeper correction to 1795, sorry, for better risk versus reward buys there. But that is only going to come if we break below 1803. Remember, these sells that we were playing were just corrective sells. US 30, Reggie, you still in those US 30 sells from 31,500? Close to 50 points, close to a 50-point scalp now. Let's hope it keeps melting. Did anybody get to catch either the GJ buy scalps, the gold buy scalps, or then the secondary gold sell scalps, or these US 30 sell scalps? Hopefully you guys got to catch at least one of those through this very slow session tonight. Oh, this is the GJ trade you took for that scalp above 0.200. A nice stop loss below the wick there on the previous hour, on this hourly candle. Broke above 0.200. You caught that impulsive move. Very nice. Jesse, you were in earlier. I like these. You were in at one around that 148, that flat candle body area. No, I just came back from vacation. I'm gonna be trading next week, like in the fresh new month. I was trading before my vacation week and made some good money, and then I had a full vacation last week, and that was actually the first time I've taken a week off from the and didn't really look at the markets or Capital Hungry for like 7 days. I was just chilling. I was just playing video games, working out, just eating, chilling. But yeah, so because it's the end of the month and I just had a vacation last week, I'm just gonna wait for some fresh opportunities in March for some more nice intraday trades a couple times a week, you know? I just came back from my little vacation. But yeah, these are very nice entries. I would like us to continue up to 0.500. We're just watching how this new 4 hour candle setting up. Just let it grab liquidity and then continue right back up. Price action is still looking very good in terms of the bullish bias. It was just a slow night, you know what I mean? It was just a slow night pretty much until Asia session closed right there. So even if we get a little bit of a retest here at 0.200, and if we fail to break for the new 4 hour candle, this could be another great entry point. Like if we do something similar to here, like we pull back, we have multiple rejections at 0.200, that could be the 4 hour candle creating its lower wick and then setting up for pre-New York, and then we go right back up. But if we break below 0.200, then we will get a deeper pullback to revisit this price sensitivity area again. There is the potential that, yeah, I was watching animes too. Someone just said Aaron Yeager because it just reminded me of Attack on Titan. I've been catching up on all the animes too. Jujutsu Kaisen, anime, sorry, Attack on Titan, One Piece. I was catching up on all that shit. Yeah, I'm actually fully caught up on One Piece. Like I'm on the recent episodes. One Piece is, if you are bored and you need something to watch and you don't mind watching and you like anime, then One Piece is like you have like almost 1,000 episodes there. We're at like 900 episodes right now. Rest in peace, Sasha. Yeah, season 4 of Attack on Titan is mental. I'm a Dragon Ball guy as well, but I've watched all the Dragon Balls like because they haven't come out with anything after Dragon Ball Super and after the Dragon Ball like Broly movie. You know what I mean? They haven't really come out with anything since then. They're probably making shit, but you know what I mean. Gold right back up to that area of interest for that new 4 hour candle. Let's see how it reacts here. Yeah, we're all out. We're all out of everything now, anyways. With the new 4 hour candle, I just want to see how we're setting up for pre-New York hours. I wasn't expecting. Honestly, I only thought I was gonna get like maybe 50 viewers this first stream back because I was on vacation last week, and it's coming towards the end of the month. So I appreciate the support. You guys coming in here, a couple hundred people. I thought there would be like 50 people because I was late as well. I was driving back in a snowstorm from my girlfriend's house. That's why I was late. Usually I would have started this at 1:30, but I had to start it at 2:30. To be fair, I fell asleep on her couch, and then I woke up. And it was 2, and then I was like, "Fuck! It take me 30 minutes to drive home." So I'm watching TV. I fell asleep. I woke up. It was 2. I was like, "Fuck!" And then I drove home from Toronto to Oakville. It's about like 25-30 minutes. US 30 buy now. I would only be looking for US 30 buys if we come back above 31,500 or if we bounce off 31,300. Yeah, on Thursday I'll be on on Thursday it'll be at 1:30 a.m. Eastern it'll start. Yeah, Raja, the only reason I'm not on Raja streams more often, like me and Raja are good friends. The only reason I'm not on his streams more often is through my trading career. I've always preferred trading London. I'm a Nighthawk. You know what I mean? I like even when I was working at you lost 8K on what? Even when I was working at the bank doing financial tech, um and I was watching systems and doing financial tech for like Asia Pac side and Europe, I was working nights, right? I prefer that. So I've always preferred to trade London session as well. That's the only reason I'm not on I'm not on Raja streams as often. You lost $8,000 on a 10 lot on gold. That means you took an 80 pip loss. Would you take a 80? Where'd you take a 80 pip loss on gold? You took a 10 lot on gold and lost $8,000. So where did you take a 80 pip loss on gold? Let's review it. Thoughts on prop firms? Prop firms like these guys that are funding like retail traders? Are you talking about the firms that are smaller but actually do trading themselves? Then you should come trade with us on the days I don't stream. Okay, the day. Sorry, I wasn't paying attention. The days I don't stream on YouTube, we're doing this same shit in the Capital Hungry private channel. Like yesterday when I wasn't on YouTube, we did a Zoom. Like the private channel to start off the week here. If it fucking works. It's not working right now. What the hell? One sec. I clicked the wrong thing. Like the private channel to start off the week here to the left. Shit. Like we already did the Zoom session yesterday, our mental reminders, our weekly recap and refresher webinar. You know what I mean? Wow, trade with Curly. That's amazing. I haven't hit numbers like that yet. Great job. Great consistency. Great dedication for 4 years with that. Almost 5 years. Great job. One sec. Clean this up. How's this shit not working? Alright, we'll just leave it like that. Alright, we'll leave it. GJ giving us that retest of 0.200. Andres, where did you lose your... Sorry, where did you lose your 8K on gold? So you took a 10 lot loss on gold for what? Huh? I don't think this guy's speaking the right language. So never mind. I thought he had like a real question or something. Someone just said they took like an 80 pip loss on gold with a 10 lot or something like that, but they can't speak English at the same time. They said, I don't know. Eighty pips is this entire range. Like, what were you gonna buy up here or something? You had a 10 lot up here? To lose $8,000 on a 10 lot on gold is 80 pips. That means you were in a buy like way up here at the top or something like that. And you were holding this whole night, and then you finally closed down here. That's the only possible way. No, because he told us the leverage. Does the monthly CH subscription include the Zoom chats? Yeah, we do these Zoom sessions in the Capital Hungry private chat every day. So the only reason I'm not on Raja streams more often in the morning is because I'm usually trading London and up during London with the private chat or doing these streams on YouTube twice a week. If I don't do it twice a week on YouTube, then we're doing it 5 times a week in the private chat alongside higher time frame analysis and like a bunch of other information and resources. You guys are hilarious. If you guys want to look, so now as we're coming towards pre-New York hours and our same bias of like GJ buys is still holding, gold looks like it's shifting back into the bulls as we're breaking above 1807 now, and this looks like it was the deep pullback to 1803. So the if we could create a lower time frame support at 1807, that same gold buy bias is still active as well. GU we've stayed out of as it's just been ranging and we never got the clean retest of 1.405. EU we played these sell scalps down throughout the night. It only ran about anywhere from 10 to 18 pips depending if you got an entry where we were talking about, but fairly slow, and we still see potential to go down to 2135. US 30 is still respecting the sell scalps below 31,500, still anywhere from like 40 to 50 points of profit, slowly making our way down. I would like to go down to at least 31,300 previous intraday lows. Now that we understand all of that, we understand what economic events we have later on, which is just the US Consumer Confidence Report. Then Jerome Powell is also speaking at 10 a.m. Eastern, which could give a boost to gold as well. If you guys want to send any charts or analysis and want me to review it, now is the time. Because we're coming towards pre-New York hours, because we've already capitalized on a few different scalp plays on like GJ or gold, now we're just going to be objectively watching the markets, doing some analysis for a bit. Jeeve, I've been trading live for a year, learning for 2 to 3. You lost 8K at the moment overall. I'm feeling low and can't seem to get a good win run. Would you suggest I give up? I so you've seen me share profit screens where in a week I made like 5K. In a month I made like 15, 20K. In some days I made like 5K, right? But and everybody goes, "Oh shit, Jeeve, that's so great. That's so great." But nobody was paying me any mind or attention when I first started, and I probably lost about $40,000 of my salary burning it into accounts, right? It's a part of the process. The amount of money you're going to lose and sacrifice through your losses in the market is going to be relevant to your financial background. Okay? What I used to do was any money I would get from my paycheck, I would take that money and put it into an account and burn through that account trying to get huge gains extremely fast and having unrealistic expectations. So don't think that I didn't take losses, and don't think that your 8K loss overall is the end of the world. I easily had 50K worth of losses when I first started trading overall with the amount of $1,000 accounts burned through. $1,000 here, 2,500 here, $1,000 here, 2,000 here, right? It was an addictive personality I had where I had a lack of knowledge, I had a lack of experience, I had false expectations in the market, and I was trying to get these financial freedom goals as fast as possible. All that leads is to crashing and burning. All right? I had to completely reset my trading psychology and understand that this is a game of probabilities, meaning you do not look like, listen to what you said, Marcus. You're feeling low and you can't seem to get a good win run. You have the pressure. You have, yeah, David, and it's different for everybody. I know guys who have lost $500,000 in a week, but they also come from wealth. And I know guys who have lost their entire mortgage and they don't come from wealth, and they put themselves in a hole through this game. It's different for everybody, but losses are 100% unavoidable in trading. Trading is about risk management in the game of probabilities. Okay? When you said you're sad that you lost 8K overall and you can't get on a good win run, you sound like how I used to sound when I first started trading. Even though you've been involved in the markets for a couple of years now, you haven't developed your trading mentality. And I'm going to explain that to you now. Okay? When you have this pressure to have a win streak or to have 100% win rate or 90% win rate in a market where you are 100% guaranteed to lose, this is going to create false expectations and unneeded pressure to perform that is going to lead to a lack of execution or poor execution. Please rewind that and listen to that again if you need to. Okay? In this market, you can be profitable with a 30 to 50% win rate depending on the risk versus reward ratio of the trades you take. Meaning, if you take a minimum of 1 to 3 risk versus reward, you're risking $10 to make $30, you can afford to have a 50% win rate and still be very profitable. Think about it this way. With your risk versus reward in your trading journey, you're standing straight right now and you're walking and your end of your trading journey is a straight line. Okay? Except there's bumps in the road of the straight line, there's hurdles, there's walls, there's fire traps, there's a lot of bullshit on this straight path. Okay? Your risk versus reward ratio that you stick to is the amount of steps forward you're going to take and the amount of steps backward. When you have a 1 to 3 risk versus reward ratio, when you win a trade, you take 3 steps forward down your trading journey and path. When you lose, you take 1 step backwards. Meaning, if you were to take 10 trades and you won half of them, you would be taking more steps forward than steps backwards because your wins are 3 times the size of your losses. Because of how toxic social media is, and because of the fact that there's a ton of marketing in our retail trading industry, everything that is fast and easy is marketed. 100% win rate signals, 90% account management, 90% signals, right? Flip your account here, flip your account there. All of that stuff is marketed because that is what is easy to sell to the retard population. Just like in any industry, it is easy to sell convenience. It is easy to make a process or to sell that dream. It's easy to do that. But what that does is create false expectations. Most manual bank traders have a 52% win rate on their trades. When they take 10 trades, they win roughly half of them. But the size of their wins is 3 to 5 to 10 times larger than the size of their losses. So where the issues come into play is once you have an understanding that this is a game of probabilities, that you can 100% afford to have a 50% win rate. The issue is that nobody can accept a loss as a controlled loss and as a business expense. If you guys were to open a business and if you guys were to start selling a product, would your business only have continuous profit? Or does your business have a balance sheet of liabilities and expenses and profits and assets? And then you minus the liabilities and you minus the expenses from your assets and from your profits, and that is the actual value of the business. If it's actually making money or losing money. Every single business has expenses or has liabilities. It is 100% unavoidable. You have to think about trading like a business, and you have to think about a trading loss like a controlled expense a business would have. The failures come when your loss becomes bigger than that controlled or planned loss. When you move your stop loss, when your stop loss was supposed to be 10 pips and your TP is supposed to be 30 pips, but all of a sudden that trade is going against you, and now emotionally you can't handle that loss, so you remove your stop loss. Now instead of a 10 pip loss, you're taking a 10 or 30 pip loss. Now you didn't move 3 steps forward and 1 step backwards. You moved 3 steps forward with a previous win you had, and 3 steps backwards right back to your entry point, right back to where you started again. There are too many people who are involved in the trading community and trading themselves and have been involved in the markets for years but have not even taken a single step forward because they are just moving on the same fucking spot. They are not following any risk management plan. They don't have any short-term goals or long-term goals. They don't stick to a risk versus reward principle. They don't track the amount of wins or losses they take. They don't focus on having that 50 to 60 to 40 to 60% win rate. They don't focus on following their trading plan. They just trade the markets day by day, going by what somebody said on this stream at New York, going by what this mentor said on IG later, going by what I said on London session here. They make some money some days, they lose it the next week. Constantly going up and down, not actually doing shit. Okay? You have to be self-aware enough and hard enough on yourself to treat this like a business and treat this seriously. You have to have as much control over your trading as possible. Gold looking like it just retested and created that order block we were talking about above the zone this time, and then continuing the buys back up, back in the range. So we got to take advantage of these buys, these sells, and now as we're snapping back in the range, you can see we're creating that order block and going back above. But anyways, you have to have as much control in your trading as possible. There are way too many factors in your trading that you cannot control, and people waste all of their energy on those factors. If the market is ranging, if news went against them, if the trade got taken out, if the market is slow, if they got taken out break even, right? A lot of people will waste mental energy and stress about these factors that they have no control over. You have to focus all of your attention and energy on what you can control. So what can you control? Well, you control why you trade. First of all, figure out why the fuck you're trading. Because you have to know why you're trading so you can create realistic goals around it. Are you trading to supplement your income? Do you already have a good job you enjoy? You just want to make some more money on the side? Are you trading to pay a couple of bills? Are you trading to develop and compound into financial wealth? Are you trading to replace your primary income? Because as soon as you know why you're trading, your goals and trading plan and style is going to be completely different. A person who is trading just to pay a couple of bills a month is trading much different than somebody who's trying to compound. For example, that guy who said he's been compounding an account from 25,000 to hundreds of thousands of dollars over 5 years now. He has probably done minimal withdrawals. He's trying to compound into a point of financial freedom or to a point of financial stability. His trading style is probably not the same as somebody who may just be trying to pay some bills a month and, for example, keeps a set amount of capital in their account and only scalps and then withdraws the profits. Do you guys understand what I'm saying? So if you first have to know why you're trading. Am I trading to compound into financial wealth? If that's the case, your goals are going to be 5-year goals, 10-year goals, 15-year goals. You can't be having monthly a monthly goal to make 100K starting from $10,000. It's not realistic. Is it possible? Sure. You could FMG $10,000 and take a 10 lot on gold and get 500 pips, and then maybe you made 50K that one trade. But is it realistic? Fuck no. All right. So if you're looking to start from a base capital of 5,000, 10,000, 20,000, and your goal is to go to 1 million, well, your trading plan and risk management plan better be adapted to looking down 5, 10 years down the road, right? But if you're looking to have a set amount of capital in your account and still work your job, but just pay some bills, you just want to pay your phone bill, you want to pay your internet, you want to pay your rent. So you have a set target of maybe making $500 a month. As soon as you make that, you withdraw it. So I don't know everybody's personality, everybody's financial background, everybody's goals, everybody's needs and wants are different. You first have to be self-aware enough to understand what you want. I personally started out by wanting to pay a couple of bills first. I liked the job I had at the time. I was making good money at what I thought I was making good money at the bank. So I just wanted, uh, okay, let me rephrase this. First, I started out by being a retard and wanted to be a hero and wanted to take $1,000 to $1 million. That led to a full year of losing and losing $50,000. That's first, okay? Then after that, then I made realistic goals and realistic plans. Then I said what I was doing before was retardation. It was not realistic. That's not how the market works. Let me start small. So my way of starting small was, okay, if I can pay just my phone bill or just my internet or pay for my gas from just the markets, that's very good. I don't have to touch my paycheck, and I am using my skill set and knowledge to pay real world bills, right? So then it started from there. And you guys could go to the Capital Hungry free Telegram analysis channel and go to the very start of that channel and see when I was trading penny lots, making a few $100s a week. After the year of losing, after the year of trashing, accounts, and after me putting in hours and hours of work every single day. Okay? So listen, after that year of bullshit and after I finally gave myself a smack on the head and finally started taking responsibility for my decisions and actions, I said I got to start small. So my first goals were to pay a couple of bills. Then I started making enough money as it developed where I was making equal amount of pay a month to what RBC was paying me, the Royal Bank of Canada I was working for. I was making roughly anywhere, depending if I worked overtime, I was making roughly $3,000 to $4,000 a month on a fully salaried bank job. A job that my parents, my friends, people around me thought was such a great job. I was wearing a suit and tie, that type of job. You know what I mean? So then my trading developed where I was making that same amount. Did I instantly quit my full-time job as soon as I started making that same amount? Fuck no. Because now, remember, I'm smart, Jeeve. I have realistic expectations. I know the market isn't consistent every single week to always do that. It's not the same as getting paid for your time. I knew if I went to my job and showed my face there, even if I did a shit job, as long as I do the bare minimum, I'll get that paycheck. Trading is not the same. Trading, you are getting paid for your skill set, discipline, effort, and experience and knowledge. You have to be on top of your shit all the time. So I couldn't, even though I started making the same amount of money as my job, I couldn't quit yet. I still kept that job up until last year, April. Then, as I started to share all this information about, hey guys, this is what I'm learning about the fundamentals, this is what I'm learning about the technicals, I started to show progression in my trading. Then people started asking me to mentor them. People started asking me to account manage, to mentor them, and to mentor them and all this other shit, right? Instead of doing a one-on-one mentorship and instead of doing account management, which I'm not licensed for, I'm not licensed to sell signals, then I created Capital Hungry. Capital Hungry became real through my work and constantly showing what I'm doing in the markets. But I first started out by being a retard, having false expectations, doing dumbass shit, and losing over and over again for a year. Then I had to reset my brain and started out by starting small, just paying a couple of bills. That naturally progressed as my lots increased, my confidence and experience increased to be equal to the amount of money I was making at my full time salary job. Then I started the capital hungry business, which only started with like 20, 30 members at the time. So at one point, I was working at Royal Bank 12-hour shifts 3 times a week. It was just 12-hour rotational shifts, right? I was running capital hungry. I was trading myself, and I was helping a family furniture business. I was working my absolute ass off. And then as my trading developed and as capital hungry started to earn more money, just last year, I finally made the decision last April to leave that full time salary job and 100% focus on trading and capital hungry, right? So don't think that the knowledge that I have now or the trade ideas that I give you or the information that I share came overnight. Don't think that I didn't have my fair share of depression, of uncertainty, of blaming everything else and not taking responsibility. Don't think I didn't go through that. I've already been through that and it's 100% guaranteed to go through that. All right? So now, for anybody who is going through that, you can take similar steps as me, or you can learn from my mistakes and do even better. Focus on the risk management and focus on the probabilities. You can have a 50% win rate as long as you follow a 1 to 3 risk versus reward ratio. If you're scalping, that means maybe your stop loss will be 5 to 10 pips and your TP will be 15 to 30 pips. But you stick to that type of ratio and you adapt accordingly and manage your risk needed during the time, right? If you stick to that type of risk versus reward ratio and you can keep your losses small or at least accept those losses as business expenses, you can win 5 out of 10 trades a week or month and you will 100% be profiting. Because think about it, with a 1 to 3 risk versus reward, if you're walking in a straight line, you take a win, you walk forward 3 steps. You take a loss, you take 1 step back. You take another win, you walk another 3 steps forward. So it's all about taking those little losses to the chin and moving forward and growing past it and milking your wins. And this is what's going to continuously lead you forward. All right? GJ played out very nice. I like how GJ buys played out from this lower time frame support we played, as well as the retest we're getting now at 0.200. Gold is getting messy. After the new 4-hour candle, we stayed out of gold. This initial buy scalp we called and took advantage of. And then Hornito, Kerwin helped us out to take advantage of these scalp sells too. Very quick plays, but the market has been ranging overnight. Volatility and volumes have been slow. So we have just been taking advantage and taking what we can. Euro USD sell scalps also played out for 18 pips. And if you guys are in the US 30 sells from the break-in retest below 500, you're up 80 points still. All right. All right. So if you guys want to join the Capital Hungry free Telegram analysis channel, you could go all the way to the start of the channel 2019, where I was showing like when I was trading penny lots, when I was using 0.01s, when I was making like $100 a day or $500 in the month. Exactly what I explained to you guys. You can see that whole process from the start of this Capital Hungry Telegram analysis channel. Like if you come here and go to the first post, exactly what I was telling you guys, look here. Look to the left here. If it fucking loads. See here? Like when I was using penny lots, when I was still trading gold, I was still trading GJ. I was still looking at the fundamentals, the entry points, the same type of ideas of market structure, news headlines, sharing, and this was all the free channel. This was all when I didn't have a service, when I wasn't mentoring. This was all just providing fundamental and technical information for free every single day, right? When I was making like 400, when I was making $16, $17 a trade, not making thousands of dollars a trade. And before this was when I lost a ton of money and I had to restart. And this is that process, right? Right? So you can see the various trades. You can see the positions I was in. This is all from a year ago. This is when gold was at 1280. If I could go back in time, I would have just put $50,000 in gold buys and then left the charts until this year. If I could do one thing and go back in time, that's what I would have done with that 50,000 I lost. I would have just bought gold and just had no stop loss and came back. It came back 2 years later. But anyways, so now you can see the process of the different analysis of fundamentals, of technicals, of sharing those trade ideas, of penny lot trades. So now when I show, hey, I made $10,000 in the week, and when I can show the losses as well and say, hey, yeah, I made $10,000, I made $8,000 in that first week of January. I had these bigger wins, but wait a sec, but I still had these losses. Losses are normal. Right? You can't be surprised about the progress I have or the amount of money I might be making now when I've already gone through that process. If you guys get what I'm saying. No, I never put 50K on trade. I said the first year I started trading, I lost 50K total. Like from depositing over and over again, $1,000, $2,000, $3,000, $1,000. I was saying if I could go back in time with what I know now, I would have taken that whole 50K and just bought gold at 1,200. But I was just making a joke. You know what I mean? So when I come here and show a three, like GJ right here, when I show a 1 minute entry on GJ at 140.800 ppl and a bullish trend with five lots or 3.5 lots, multiple positions placed, is it anything different from what I was showing you guys on GJ today? Answer that question. The same way we were playing GJ lower time frame price action and the break and retest of a PPL, is it any different from the 140.800 buys here? Or if I show these type of trades now, or this fundamental analysis or this technical analysis, why be surprised is all I'm saying, right? But yeah, make sure you guys join that. A lot of information here. If you guys didn't know me, then obviously you'd be like, oh wow, this guy might be a fucking demo scammer. But once you see the process and you understand that you started from penny lots and you started from like this whole studying system for years now, it's not that crazy to see me making $5,000 in a day. You know, that is the progression. Or saying, hey guys, that $5,000, I took a couple more trades, it's $9,000 now. The only thing is, if you don't progress, if you stick to trading just penny lots for years, then something's wrong. Right? Or here, like, you can see, like, my fucking thing froze. But anyway, let's go back to the news as well. But as long as you push yourself and you keep progressing, then nobody can judge your journey. You know what I mean? So yeah, just for the risk management side and that side, just focus on that. No, I personally never had that. I've always just like that channel I was showing you guys was always a free channel to start with. So that was just a channel where I was sharing information, trade ideas to people. Capital Hungry came after that. But anyways, guys, we're coming towards 6 a.m. Eastern here. Even though it was a slow night, we still got to take advantage of some GJ scalps. Still got to take advantage of some EU sell scalps. US 30 ran well too. You can see. Shit, the fuck is this, man? But I'm going to be saving this and sending it over. All of the trade ideas that were shared the first couple of hours of the webinar are still valid throughout New York in Asian session now. Okay? Like our GBPJPY analysis, still very much valid. The gold, if we come back above 1807. So make sure you guys rewatch this as well. And I'm going to see you guys later. I'm going to see you guys later now. I'll see you guys on Thursday. It's not legal to sell signals in Quebec? I'm not sure. Quebec has a lot of its own regulations and laws, like that's different from Canada. So that's something you might have to search up yourself if it's legal to give financial advice in Quebec without a license. Just search that up. Make sure you guys like and subscribe, share it around. You know what I mean? I wasn't expecting too many viewers because it was my first session back and I was late as well. But I'm glad you guys came. And I'll see you guys on Thursday. Yeah, any financial advice where you tell someone to do something specific with their money is considered financial advice, like that, which is what signals are. That's what direct signals are. You're telling someone, hey, take your money, enter this trade. This is your take profit. This is your stop loss. You can't give that type of financial advice without being licensed in your specific country. You know what I mean? Thank you guys. Take care. Everybody take care. Be smart. Be safe. Enjoy. I'll see you guys on Thursday.